like you did yesterday. Make me look good on this YouTube video. G'day, Steve. How's everyone doing? Hope you guys are great. Hope everybody is happy and ready to do some stuff. Hope everybody is exercising their patience bones this morning. Good morning, Jeffrey. Guys, I posted that picture just right before I started the classroom. And it's that reminder, and I really wanted to put this in here today because it's so true. And yesterday I didn't have the best day with this. Yesterday I made a lot of silly trades because I got bored. And I hate to admit that, but sometimes it happens. Hey, can everyone hear me okay? Everyone but Rob? You guys have audio? Yeah? Okay, let's tell Rob to do that reboot. Rob knows the deal, right? Trading is very much a discipline, but it's also a vocation, right? So Muser, think about this. And I don't know what your career was, right? I don't know what you did for a living. But when I was man, I'm full of stories this morning. I'm just going to warn you guys now. So I spent 30 years in the restaurant business. I spent 11 years in management, a couple years as a general manager. And it was very much a vocation, right? But in order for my restaurants to run the absolute best, there was a discipline that had to be followed. There were routines that had to be followed. There were checklists that had to be followed in order for my restaurants to run as smooth as I wanted them to run. Everybody had a job. And every job had details that were important. So I don't even know what consumer pop design is, I'm not going to lie. But that's your vocation, right? And then there's a way to do your job great, and there's a way to F it all up. And guys, I think everybody's job is like that. So when I was in the restaurant industry, guys, point of purchase, okay. So when you're doing consumer point of purchase, right, all the routing has to be right. Hey, Rob. And the card readers have to be right. And the routing to the banks to get people paid has to be right. And if you don't take care of the details, well, then you look like you're bad at your job. And guys, trading is kind of the same way. If you don't go through the process that yields the results, you're probably not going to get the results. One of the things that I really excelled at when I was in my career was I created checklists. I created systems and routines. I created sales plans. And I did all these things because the way my brain works is when you have an order of operations, you find success. And that's kind of how I teach this class. We go very much through order of operations. The first order of operations is checking news every day, making sure that you're not trading into news, making sure that you're not entering the market right when there's some big emotional roller coaster about to happen. I don't trade the news. I don't react to the news. I don't have a trading plan that involves news other than anytime that I see a red box or an orange box, I choose to sit on my hands and do nothing because the market becomes volatile and a little untradeable. I'm not sure what the ADP thing did this morning. I wasn't really watching it. At 9:45, we have final services PMI, whatever that means. 10 a.m., we've got the big nasty version of it. So at 9:45, 10 a.m., guys, this is a great time to go take a break. Go toast a waffle or something, right? Pet your dog behind the ear. And then you crude oil traders at 10:30 a.m., we have crude oil inventories. Guys, this is the only low impact news that I refuse to trade into with crude oil because there's a group of people waiting to see what's in reserve. Rambler to gambling, man. That's okay, Paul. We'll talk about it. Crude oil inventories can really make that market spike. And guys, the flip side of that, if you know it's crude oil inventory day, I'm going to tell you right now, the market may not follow through. You may have a lot of people jockeying for position in that crude oil so that they can be in the place they want to be when news releases. And what happens, guys, is knowing that is there creates an advantage. It keeps you in the management mode. It keeps you ready. It keeps you aware. And every market has its own personality. And on crude oil inventories day, that personality is a little bipolar sometimes. So watch out. Malcolm, what I'll do is, so for example, if you're trading the ES, right, and you know there's this high impact news, no, burn the waffle. Don't burn the waffle ever. Malcolm, do you have enough repetition in the market? You've got a pretty good idea of what it looks like when it's flowing, right? You've got a pretty good idea of what the speed is, what the bounce is, what the vibe is in the market, right? Every market has it. Crude has one, ES has one, NASDAQ has one. So when news releases, a lot of times you'll see a very clear disruption. You'll see bars printing so fast you could never read them, right? So when you get to a point to where you can do your chart reading, you can check your rules, and you have time to react, that's when you start trading again. So it might be a minute, or it might be FOMC where it could go on for 2 hours. Cool. Great question. Very great question. Guys, news isn't what we do, right? Patterns are what we do. So we just check news every day to make sure that they're not disrupting our patterns. And then everything that I talk about, guys, is from the website. Specifically, the trading guide, right off the education tab, guys. This is where all the answers are. I refuse to withhold from you. I'm not going to give you a little and then sell you more. Good morning, Miss Jen. I'm literally going to give you everything that you need to be successful with the software. I'm going to walk you through what it looks like to have rules met. I'm going to walk you through how to study so that you can get better at it. And I'm going to give you feedback every day on everything that you post in the room. So there are no secrets. All you have to do is a little bit of work to get to where you want to be. But I want to talk about something that happened yesterday. Sorry, guys, you got a story this morning. I run a lot of parallels between me trying to be a better golfer and day trading, guys, and it's so true. So I've been off the golf course for about 2 weeks with a back injury. So yesterday was the first day that I swung clubs, and I was very tentative because if you know anything about the Novak spine, we've got hardware and it's horrible and we can't feel our legs, and it's just part of being a Novak. So I go out to the golf course, and my first shot's beautiful. And I'm like, yes, I haven't lost anything. And then my next 10 shots, every one of them went to the right. Every one of them was horrible to the right. And I thought, oh my gosh, I forgot how to swing a golf club. And there was this amazing older man in the bay next to me. And guys, one of the great things about just community, I think, is a willingness to help each other. And you see it a lot on the golf course. Usually it's the people that don't know anything that try to help you. But this guy was probably 70. And he was hitting them straight. And everything, he looked like he just come off of the television. And he turns and he looks at me and he goes, hey, you're standing too close to the ball. And that's it. And I was like, okay, thanks. And I fixed it. And oh my gosh, guys, it changed my entire golf swing. Having somebody from the outside looking in at what I was doing, I was able to make a correction and start hitting the ball straight again almost instantly. And that's what this class is, guys. I'm that old man. Good morning, John. I'm that old man in the bay next to you. And while you're wrapped up in your trading and worried about wins and losses, all I'm doing is looking for a way to make it better. So post in the room, guys. Give me a chance to be that coach for you. And I'm telling you, the feedback is going to take you places. Everything is here, guys. There's nothing that's not there. The trade that we're going to talk about for an hour, the same thing we do every hour, every day, is what we call a high probability trend trade. And a high probability trend trade is just a trade that typically wins 70 to 80% of the time. This is the easiest to spot, the easiest to study, the most basic, highest probability trend trade that we teach. And it's a trade that just revolves around advantages. And it's a pretty simple approach to learning the software. And what it does for you is it teaches you to read the software. So right now, everybody has like the greatest hammer in the world just sitting in their hands. And you have absolutely no idea how to build anything with it, right? And that's kind of what this classroom does, is we take what's really probably, in my opinion, the best software out there, and we teach you how to use it, turn you into a chart reader Because chart reading is literally 90% of your day, guys. 90% of your day is spent reading indicators. And it is going to be the read that you have that lets you know if your rules are met. And if your rules are met, well, then you're going to take a trade. So we're going to spend a lot of time waiting for these advantages to fall into place. But your chart reading, whether you're taking a trade or not, is going to allow you to recognize where the market is likely to continue, where it's likely to go, where it's likely to stop. And you're going to incorporate these into everything you do. Initially, you'll incorporate it into the high probability trend trade. But the more study and practice and feedback that you get, you're going to start to see all these different opportunities open up in the market. And it's fun when you start to see things that you didn't see 30 days ago, 60 days ago. And guys, that's the process. That's the way it's going to work. So I'm just going to get into it. To get you where you want to be, I need you to post in the room, guys. To get you where you want to be, I need you to show me what you're doing. I need you to show me your chart read. And I'm going to say this real quick because I'm still getting pictures in the room that say I took a trade, right? And I'm still getting pictures in the room that say, was this a good long? And that's okay. I'll answer those. But if you're not taking the time to write on the chart, to tell me what you see, to tell yourself what you see, if you're not talking about where you got in and why, if you're not talking about where you got out and why, it's not a disservice to me, guys. I can read your charts wonderfully. I know exactly what you were thinking. I can even tell you the point where your butt puckered a little bit right in the middle of the trade because I've been doing this for a long time and I've made every mistake that you've made. But the thing is I need you to understand why you took the trade. I need you to go back and study this so that you can repeat things that are bringing you successes and so that you can avoid things that are not bringing you the success that you're looking for. Rookies. Man, I was the worst rookie ever, Rob, excuse me. And that's why I'm so adamant about this process. That's why I'm so vocal about posting in the room and asking questions because, guys, I absolutely refused to do it in the beginning. It was my ego. It was a little bit of fear. But I didn't want to ask for help because help meant that I didn't understand. And let's be honest, guys, we're all freshmen in college. It's our job to not understand. We've got to make mistakes, right? We got to pick a few fights and lose them. We got to fail a couple tests, and we become better humans for it. So post in the room, guys, win, lose, or draw. But be very thorough on the annotations. Good morning, Zorro. Tell me exactly what you see, because if the goal is to be a chart reader, I need to know what your reads were, because we'll just work together to fix them if they need fixing. The second thing is use the spreadsheet, guys. Nexgen gave you a spreadsheet. It's right in your Nexgen Study Picks folder. I share mine every day. We update it even more every day. So every day I drop a fresh copy in the room. Make sure that you have a copy. Make sure that you have this spreadsheet, because this was the other tool that I refused to use as a new user. John Novak told me 3 things when I started with the software about 4 years ago. He goes, Mark, you need rules, you need to know what they look like, and you need to post in the room and get feedback so that we can make sure that you're following those rules. And I didn't do any of it, and it cost me $5,000 in about 3 hours because my ego said, hey, you got lucky on Sim, it's time to go live. So I really teach this classroom from a place of I don't want you guys making the mistakes that I made. So make sure first that you're annotating your charts, that you're telling me everything that you see every time you take a trade. And then second, make sure that you're dropping every trade. Every trade. Yeah, about $1,600 an hour, Rob. Every trade that you take, win, lose, or draw, take a picture, annotate the hell out of that chart. Write too much on the chart. And then get it into your spreadsheet. Your first page is a trade journal. Your first page is where everything that you do, you're gonna put it in there. You're gonna talk about how you felt. You're gonna talk about the advantages present. Guys, there's even little drop-down menus to help you so that you don't have to type everything out, right? This is a lazy man's game. Talks about your targets, and then there's an entire section on the side for notes. What did Mark say about my entry? What did Mark say about my advantages? What did Mark say about why this one maybe didn't work? What did Mark say about how I could enter with less risk and make more profit? Guys, fill up your notes sections. Fill it up on the chart, fill it up in the spreadsheet, but don't skip this one. And the idea is that every day you come back and study it. And this is the second half of it, guys. Taking pictures is great. Coming back and studying those pictures is greater. And that's why you have to annotate. That's why you have to write on your charts. Because I'm going to come back tomorrow morning and look at what I did yesterday, right? And I'm going to say, what worked? And typically what works is following the rules. And I'm also going to ask myself what didn't work. And this is where I'm going to tell you guys right now. Everybody has a thing. Everybody has one thing at least that they do that's robbing them of success. For some people, it's trading into areas. For some people, it's getting in way too late and it's difficult to manage risk. For some people, yeah, Paul. For some people, it's hope. They trade on hope. And guys, I'm not afraid to tell you that you're wishing in one hand and pooping in the other to see which fills up first. I'm not afraid to tell you that you're breaking rules, because my goal, I get this kind of mama bear thing going where I just want you guys to have the highest chance of success. I want to see you succeed. So you have to ask yourself, what worked? What didn't work? It's killing the trade way too early, right, Morgan? Morgan, you want to know the truth? Is before I trusted my rules. And so this was after failing miserably and before finding success. I was in this transition period where I knew where I should be getting in. I went back and I did the study. And my entries, Morgan, were freaking amazing. I mean, I was a sniper picking entries. And then I would absolutely choke, and I would take about a tick on the trade because I would panic. And I'm not, I mean, just it is what it is. So at the end of the day, I'd take 20 trades, I'd be up 21 ticks, and I'd be down $150 because of commissions from taking the most wonderful entries ever. So Morgan, dude, you're not alone. But eventually you learn to trust it, guys, and that comes through going back and studying, from looking at patterns, preparing yourself for the day by understanding what you're going to focus on and what you're going to avoid. And then once you start doing that, once you start posting in the room, the first thing you're going to realize is that it's not scary, right? You're going to drop a post in and we're going to talk about all the goods. Guys, I'm very much a victory celebrator. I'm going to look for everything good on your chart that I can find. And then I'm going to go to finding every challenge that may have been in place. Because what we're going to do is you're going to say, hey, this is great. Let's do it again. This is bad. Let's avoid it. You've got to learn the rules though, guys. We're going to spend a whole hour talking about high probability trend trade rules. We're going to talk about the advantages. We're going to talk about when it's okay to trade. You're going to simulate. You're going to practice. You will make mistakes. I want you to make mistakes. You will lose trades. It doesn't matter. It's monopoly money. Guys, you can't affect your quality of life if you stay on simulator while you learn. And the goal between the two of us is to try and get you to where you're always taking the right trades, where you take the trades that produce a statistical advantage, where you're taking these trades that let you know this is a trade that does in fact win more than it loses. And what happens is you start developing this trust in the looks, this trust in the methodology, and we're going to keep it real simple so you can do that. We're going to focus on the high probability trend trade. You have to know what looks you're going to commit to, and I'm going to tell you guys, this is where the spreadsheet really starts to pay dividends. I've created a second tab that is nothing but the rules for the high probability trend trade, where you can break them down individually so you know exactly what it looks like to have your rules met. There's also the client trades, where there's about 350 pictures of you guys crushing it with the software. Not just you guys. Guys, this is the 3 or 4 generations that came before you. The same people that were finding success. They're not in the classroom anymore. They fired me, thank goodness. Because they're off being successful, making money, changing lives, right? Go study these. Look at entry sequences. Look at management. Look at patterns that repeat themselves, termination conditions. And guys, your goal is to have your favorite look section look like this one that I put my time into, right? And the more you fill this up with the perfect looking trade, the more you fill this up with ideas on management, Morgan, The more you fill it up with patterns that repeat themselves every day, those chart reads, guys, the quicker you're going to get to where you want to be. And learning the looks so they're easy comes through repetition. Guys, repetition creates recognition. If you watch videos of Tiger Woods playing golf, you're not going to go out and shoot a 65. If you watch Michael Jordan slam dunk a basketball, you're not going to be able to do it just because you watch videos. You've got to get out and practice. You've got to get out and make mistakes. You've got to take that coaching so that you can get better. I like it, Gary. Just stay on sim, right? Get your mojo back. You've had a rough week or two. So I like that. I like that plan. That's intelligent. So guys, learn the looks so they're easy. We're going to talk about what it looks like when it's easy. And I'm going to tell you, simplicity is key. The more things you give yourself to look at, the less you're going to find, right? You'll probably find the losers. We're only going to do 2 charts. Oh man, that's not the one that I wanted in there. Hold on. Dun, 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 dun. I wanted to use this one. Yeah, no kidding. You're going to use 2 charts, guys. You're going to use a large chart and a small chart. Your large chart in one bar, one single bar, the most current bar on the large chart, is going to define the direction of the market. It's going to define the momentum of the market, and it's going to define whether or not there's areas that are problematic. Guys, rules 1 and 2 are met on the large chart. 2/3 of your advantages come from the large chart. The small chart is a refinement chart. The small chart is where we're going to take this one bar and you're going to see literally an X-ray of all the price action inside of it, the ups, the downs, the fluctuations. And we're going to use this smaller, faster chart, guys, this refinement chart, to pinpoint exactly where the market is most likely to continue. And that small chart is where rule number 3 gets you into the market, where rule number 3 says, hey, this is where it's most likely to continue. Let's take an entry because our advantages are in place, guys. And those advantages are only 3. 3 advantages for the high probability trend trade. Only 3 rules for the high probability trend trade. Guys, I'm going to say it again, simplicity. Don't overthink it. Don't try to change these rules. Don't try to add to these rules. Don't try to write your own narrative. Let it be 3 simple rules. Each rule provides an advantage. It's the advantages, momentum and a clear path that takes you to the entry area. Guys, this is your high probability trend trade. This is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. Guys, this is the trade that teaches you to read your charts, to read your indicators. And I'm going to tell you right now, once you're good at the first 2, once you can have momentum, once you can understand whether or not you have a clear path, guys, you're going to find entries. You're going to find entries at areas. You're going to find entries from jumping in. You're going to find little snapbacks. You're going to find freaking everything out there once you're a chart reader. So focus on the simple stuff. Turn into a chart reader, guys. Rule number 1 says you must have strong trigger lines. Strong trigger lines create the advantage of momentum, guys. Strong trigger lines are a pretty easy lesson. When the background is green, the market's going up. When the market's going up, you should be too if you want to give yourself the best chance of success. So when the market is, in the background is red, it's going down. And once again, you should be too to give yourself the best chance of success. People that fight the trend rarely win. They will sometimes, just enough to get that luck in there to feel invincible. A broker told my brother once, he's like, hey John, you know, I can get you $1 million in your trading account. And of course my brother's like, cool, sounds great. How do I do it? And the broker says, all I need you to do is fund it with $2 to $3 million. Keep fighting the trend every chance you get. You should be down to $1 million by the end of the year. True story. So guys, go with the flow, right? And then once you see that the market's going up, strong triggers means that your small triggers are above the large triggers. Smalls are solid lines. Larger dash lines, these are nothing but moving averages, and I have no idea the math that goes into it. When the small triggers are up and above the large triggers, break away, create space, the large triggers are widening, opening up in the direction of the trend, guys. This is strong triggers. And strong triggers means that the odds are favorable for the market to continue up. So, Jonathan, here's what I need from you. I want you to write rules on your chart. I want you to tell me why. right? Why was your stop there? Why was your entry up here? What on this chart made you do it? If you don't tell me what you're reading, how can I help you with your reads, right? So go through those simple rules. Awesome. And what's going to happen is, Jonathan, I promise you, I'm good at reading your charts, but I want you to know exactly what was going on there, so that we can repeat it. Does that make sense, Jonathan, without sounding too harsh? Awesome. And what you'll find is that when you do this, things start to click. Things start to click. The more you annotate charts and what you see, the faster you're going to get to consistency. So, strong triggers, guys. Smalls above the large, larger wide, space between the two. Odds are favorable for the market continue up. This is the best time to buy Fibonacci support on a smaller, faster chart. On your large chart, it looks like a tail or a wick. You will be able to pinpoint exactly where that tail is most likely to form. You're not going to use a tail for entry. You're going to be able to use this tail for study. In a downtrend, smalls are down, large are down, everything's wide in the direction of the trend, the colors match, the space is there. The odds are favorable for the market to continue down. You're going to hear me say odds favorable momentum about 1,000 times a day. You're going to hear me say odds favorable momentum when we're talking about a market that's likely to push. When we're talking about momentum that has the potential to break key areas. And when we're talking about a look that can actually cover up some of the mistakes that you and I make as new users. And when everything is down and the triggers are strong, that is the best of the best time to sell Fibonacci resistance on a smaller, faster chart. And guys, this doesn't last forever. I want you to think about scissors opening. When the scissors are open, I have momentum. When the scissors are open to the downside, I have momentum. I'm looking for short trades. When those scissors close, when the small triggers return back inside of the large triggers, guys, we call this a weakening of the large triggers. The push of the trend is dying. The momentum is slowing. The advantage is gone. And the words that we use are anything can happen. Anything can happen up or down. There may be a big ugly retracement, right? It might continue down. The reality is the second you don't have something that has been proven to give you odds favorable momentum, anything can happen. And you have to ask yourself, which one do I want to risk my money on? Do I want to risk it on the advantage of momentum, or when it becomes kind of a crapshoot, right? So odds favorable momentum, guys, is everybody good with it? It's really a simple look. Smalls below the large, everything says down. Let me see if I can find my large chart here. Let's get a real world example. The most current bar. Smalls below the large are wide, they're angled in the direction of the trend. I'm about to lose my Ninja Trader because of that big ugly drag that I just did. Guys, odds favorable momentum is the key. Odds favorable momentum, that's the one that I won't do without. Odds favorable momentum, that's my favorite advantage. And you're going to find a lot of plans that revolve just all around that momentum. And down scissors cutting buyers, up scissors cutting sellers. John, I think you're overthinking it. And let me show you why. That confused me. I'm not going to lie. Let's take a picture of a picture real quick. When the market's going up, it's not the direction at all, John. What it is, and check this out. Let me grab the pen tool here. What it is, what's going to be the most visible? We'll go black. Here's your blades, right? There's your blades for the scissors. And when they're open, I can cut. It's like Pac-Man. So when the blades are open, I can cut. Man, I'm killing everything today. I am killing everything that I touch today. The scissors are open. We can get work done. And it's really that basic. In a downtrend, it's the same idea. The scissors are open. We're not cutting buyers or sellers. We just have the ability to get work done, right? And then when those scissors close, when everything comes back together, you're not getting anything done. You might be taking a stab at it, right? But you don't have what you need to get the job done. And I think that's what I like to associate those open scissors with. So let's see if I can find that large chart again. The most current bar. Smalls are below the large. The large are wide. They're angled in the direction of the trend. Can you guys give me a Y in the room if you see that this is in fact odds favorable momentum right in the moment? This is a market that has the potential to push down. But guys, that's only one rule, right? Here the market had strong triggers. And look what happened when they weakened. We got a huge retracement, right? And here we had strong triggers right up until we hit an area. And here we had strong triggers until we got to the area. And here we had strong triggers until the area stopped it. So it's only part of the equation. Guys, you will be able to pinpoint where the market is most likely to continue with that strength. You will be able to pinpoint where these tails are most likely to form with that strength. But the strength is only the first part of it. The strength is what says, hey, let's look for the next step. So the strength is going to be strong, it's going to get weak, and then it may just be gone completely, guys. When I have weak triggers at areas, those areas are more likely to hold. And that's where we get to rule number 2. And I did some modifications on this part of my little PowerPoint. So rule number 1 says I have to have momentum, right? Momentum is the fixer of things. Momentum is the one that carries you. Momentum is the one that can break key areas. Momentum covers mistakes, guys. It takes you literally a day to understand the look if you just scroll back and look. Once you have momentum, you have to make sure that you're not trading into termination conditions, that you're not trading into those likely to stop areas. And when you're not, you will have room to your profit targets. And when you have that, we're going to call it a clear path. So the easy way to say it is no termination conditions. When you have momentum, you should have no termination conditions. Well, what's a termination condition? It's just a Fibonacci-based indicator that may reverse the market. And guys, this is based on a comparison. The same triggers that give you momentum are the ones that are going to let you know if these areas have the potential to hold, or if they have the potential to break, or if they're already broken. And the key is understanding that it's lines on a large chart. These are where decisions are made by the people that move the market. Lines on a large chart are where people, big colossal accounts, are entering, are exiting, or fighting. Lines on the large chart are where decisions are made. The lines that we're looking for are blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, and then those divergence high and low lines, guys. These 5 are lines on a large chart that can ruin your good time. We're going to talk about 3 divergences in the same area. This will happen on a large chart. It'll happen on a range chart. It'll happen on a tick chart, a month chart, whatever. But you're going to see it on a small chart first. So we're going to talk about it. And then, guys, also that large chart mid-band, if the large triggers are a full bar away. And I know this one's going to take a little more study than just that separation of triggers. So how are we going to do it? Here's the recipe. It's super easy, guys. If price reaches an area, that's the first part. We have to set off the decision-making process. If price reaches the area, resistance, and the triggers remain below, this area is a termination conditions. No more long trades into it. If price reaches support, the triggers remain above. No more short trades into it, guys. It is the easiest recipe ever. Price reached the area, where are my triggers? So again, let's go back and see if we can't find an actual example of rule number 2 in play. Price reached the area, the triggers didn't break it. Pretty simple. Price reached the area, the triggers didn't break it. Price reached the area, the triggers didn't break it. How cool is that? Look at that, guys. To the freaking tick. To the tick. Price reaches support, triggers don't break, no short trades. Price reaches resistance, triggers remain below, no long trades. Price reaches support, triggers above, No short trades. 90% of your day is spent reading your indicators. 90% of your day is waiting for advantages. And when they show, that's when you're going to be able to capitalize. So if price reaches an area and the triggers remain above support, below resistance, I'm not trading into that area. My advantage is gone. There is no clear path. When my small triggers smash through an area, I mean smash through an area, 3 to 4 points, guys, not just peeking their little heads above it. And my large triggers are lagging behind, but I have odds favorable momentum. This area has the potential to break, but it's not broken yet, which means that I don't have a clear path. And then once the small and the large get beyond resistance, resistance behaves as support, my path is now clear until I reach the next area. This is where I'm looking for that momentum. This is where I'm pinpointing my entries. So guys, for the brand new user, for the high probability trend trade, you have to have a clear path. It has to be both triggers through the area to have the best of the best advantage. But when these areas have the potential to break, I'm going to give you a plan to take it. I'm going to give you a plan that has you focusing on advantages so you can still capitalize. And I'm going to tell you guys, most of your trades are going to be this trade. But if you don't understand the very basics first, it becomes a little difficult to catch. So if price reaches a divergence high line, this is just a pivot, right? The market goes up and down. If there's a loss of momentum, you'll see a pink line. That's not a termination condition, guys. That's just a loss of momentum. The recipe never changes. Price must reach that divergence high. And when it does, if it trades above and back below, we call that a pivot stop out. Soon as it's clear, Pete, well, it depends on what trade. If it's a high probability trend trade, it has nothing to do with how far you are past. It's how far are the triggers. When the trigger's clear, the path is clear. It's almost too easy sometimes, right? Show me a picture. Take a picture. If the small, and Jonathan, you don't have to ask me comments. I promise I'm going to mouth off on everything you show me. That's the small chart. Hold on one second, Pete. There we go. Most current bar. Did the small and the large triggers, Pete, clear the area? No. Notice how the small triggers barely even got through there. You'll also notice that when the mid-band was reached, those large triggers were a full bar away. Pete, you have... This is kind of cool. I like this. So check it out, guys. We're going to blow it up huge. In order for the path to be clear, that's okay. Both the small and the large have to get to the other side of all of these areas. Does that make sense, Pete? So until that happens, my path is never clear. So when the smalls get through, and have you heard me say in the room, smash, right? I mean, annihilate. 2 to 3 points. 2 to 3 points. Not a little gopher peeking its head through. Did these triggers smash through? Not so much. Not really. So what happens, guys, is we're coming down, we're hitting this area, and your trigger lines are telling you this is an area that may stop the market. This Fibonacci support hasn't broken. This fib hasn't broken. This fib hasn't broken. These one-to-ones haven't broken. And guys, your mid-band is a termination condition if there's room for this bar to complete before it hits those large triggers. So we literally have 1, 2, 3, 4, 5, 6 areas, Pete, that we are hoping breaks if we're going to look for a short trade. Does that make sense? And guys, it's a pain in the ass. It means that you don't have a trade. But I want you to see this. Look at the bounce off of these areas. Does everybody see? There were decisions made right here. There were decisions made right at this area. And the buyers started to push and the sellers lost a little bit of their giddy up. And rule number 2 keeps you from hoping that this short trade works. And it's kind of neat the way that works. Rule number 2 says it's not perfect. Rule number 2 says this area isn't broken. Rule number 2 says my path isn't clear. I'm just going to sit on my hands and do nothing for a second. So whether it's a low or a high, when price reaches that area, if the triggers don't break, it's easiest to just not take a short trade. Price reaches support, the triggers remain above. No more short trades. Price reaches a divergence low. Triggers remain above. No more short trades. Guys, sometimes it's going to stop the market and reverse it. Sometimes it's going to create an untradeable bounce. Sometimes you're going to get caught in between Fibonacci areas, right? Sometimes you're going to think it's reversing and then it hits that next area and heads back up. So guys, don't ever complicate the very simple approach. If price reaches an area and the triggers remain above or below, just sit on your hands for a second. And I think we saw a lot of those, right? Just by tightening it up and looking at it. Divergence high, one trigger breaks, but both don't, and there's your reversal. Weak triggers and it heads back up. Can't break and it heads back down. Small and large don't break. It's not clear. But guys, here's the awesome part. Is that in between these key areas, you're going to be able to capitalize. In between these key areas, you're going to start to see reasons to take a trade. And if you just scroll back, what happens is you start to believe that you don't have to trade into these areas, that you don't have to hope that they break. Rule number 2 keeps a lot of people out of a lot of nonsense, and it buys an awful lot of patience for you guys once you go back and you scroll and you study. And then here's that thing why the mid-band is a termination condition, guys. It's called the gap theory. When price accelerates away from the large triggers and it hits a fib, it hits a mid-band, it hits 1-to-1s, it hits a divergence high. If it hits any line on a large chart and those large triggers remain a full bar away, and I can use this reversal bar marker that's on the large chart to show me I'm going to have a reversal bar right here and my triggers are below it. Guys, any of these areas, don't trade into them. Because the pattern is when price hits an area, the triggers are a full bar away, it's likely to close that gap. This acts like a vacuum. If you close your eyes, you can actually hear a sucking noise as price comes back and reaches that area. And that's another one of those ones, guys. We can just go study it. Price reaches the mid-band. Large triggers are a full bar away. There's your gap theory right there that told all of you no short trades. Price reaches the mid-band and support. Large triggers are a full bar away. Absolutely no shorts. This is a pattern that repeats itself every day. Price reaches a Fibonacci area. Large triggers are a full bar away. Look at how it closes the gap. Does that make sense, everybody? You're going to have to go through and study this a little bit. And guys, this look doesn't say go short. This look says be patient. It's too soon for the long. Give it a minute. So guys, termination conditions are designed to keep you safe. Termination conditions are designed to let you know where the market may stop. Termination conditions break, typically with odds favorable momentum. The gap theory is going to keep you from trading into mid-bands. And then there's one more termination condition, guys, and this happens on every time frame. Every time frame. 3 divergences in the same price range. Awesome. You're welcome, Rob. And if you look in the spreadsheet, Rob, that I give you guys every day, there's about 20 pictures of the gap theory in there. And I think they're all labeled gap theory. Guys, 3 divergences in the same price range may terminate the trend. 3 divergences in the same price range. 3 losses of momentum. That's all a divergence is. Price went down and up right about the 3rd bar. Your software did a calculation. And when momentum didn't follow price, it printed this blue line, or it printed this magenta line. If you see 3 of these in the same price range, it may terminate the trend. If you have weak anything can happen triggers at that 3rd divergence, it makes it stronger. And if the final pivot is higher than the previous from a low or lower than the previous from a high, guys, that's a deal breaker. You'll see this on the small chart first. Jonathan, I want you to use the exact same lesson that you use for areas. So when I have a divergence, if the small and the large don't get below this line, this divergence remains in play. If the small and the large don't get below this line, this divergence remains in play. So it's the exact same recipe. That's a great question. Thank you for that. So guys, 3 divergences will help you see on a smaller chart when you can't see that change happening on a large chart. So termination conditions, guys, they happen on a large chart. Termination conditions are that large chart line creating problems. Termination conditions let you know where the market is likely to stop. Termination conditions, even no matter how much momentum you have, can halt that forward progress. So you've got to go back and study it and learn to believe it. Here comes your... You guys see how crude is picking up a little bit? They're jockeying for position, guys. They're getting ready, winding up. So is everybody cool with the first 2 rules? We're still 15 minutes out, Morgan. But you'll see it start to get a little active right before your buyers are like, let's see if we can't push it down to the best price to unload. And the sellers are like, oh, let me get it where I want it. Let's see what happens. That's the PMI. Crude oil inventories aren't till 10:30. So yeah, you'll see the... Let me see if I can open up my S&P. You'll see the PMI a little more on the S&P. There is at 45. That's that medium impact, and then at 10 a.m. we have high impact, and then at 10:30 we have crude oil inventories. So guys, can you give me a why? Large chart has defined your momentum. Large chart lines are defining where there may be a problem. Once these 2 are in place, once I have momentum, once I have a clear path, I'm going to find an entry area. So the one that we're going to talk about now is the high probability trend trade, guys. The entry area that we're going to talk about right now is taking that refinement process, taking odds favorable momentum, taking the potential for the area to break here, and then using these retracements on a smaller, faster chart to pinpoint exactly where the market is most likely to continue. When I talk about these tails, guys, these tails should line up with areas inside of favorable large triggers. That's rule number 3. Rule number 3 says that you're going to use a limit order, meaning that you're going to actually wait for the market to come to you. And you're going to use that limit order at an area. You're going to buy or sell a pullback at an area. So areas on the large chart said, hey, this may be a problem. Areas on the small chart give us something to bounce off of. We're going to use lines on a small chart for entries. But here's the key, guys. We want areas to be inside of triggers. So there's 2 ways to look at triggers, guys. There are just triggers. So on your small chart, you have 2 sets of what look like large triggers, guys. Just call them large triggers. Don't call them anything other. But it's a large trigger, which is smooth and native to the 5-1 chart. The same trigger line that lets you see that there's odds favorable momentum. And then there's the synthetic trigger, which is nothing more. When we say synthetic, guys, it means that it's pulled from a different time frame. So your large chart, large trigger, is superimposed on your small chart. That's why you have 2 large triggers on the small chart. And there's 2 ways to look at these triggers. There's what we call favorable large triggers, which means that both of the trigger lines, guys, the large and the synthetic, are one on top of the other. Both of the trigger lines, the large and the synthetic, are overlapping. They're like 2 snakes riding piggyback. And there's a reason, and I'm going to give you guys this. I wrote this the other day. I need to incorporate it into my little slideshow here. But let's look at this real quick. So, the entry on the small chart, guys, it takes 1 bar's worth of information from the large chart. It dissects it into 20 bars on the smaller chart. Rule number 3 says you're going to buy or sell a pullback at an area inside of triggers. And this is kind of the whys. So, large chart triggers, or large triggers, guys, these are moving averages. And price typically returns to the moving average. You're going to hear me call it a correction point. These large triggers are where I expect the price bars on the large chart to return. These large triggers on the small chart are where I expect price to return. This is my correction point. So by putting the large chart triggers on the small chart, I can have an identical correction point, and that is why we call it favorable large triggers, because both triggers create the expectation for price to return to the exact same area. Does that make sense, everybody? So favorable large triggers are when your large and synthetic are overlapping, one on top of the other. This is going to create the absolute smallest window to put areas inside of, guys. This is going to reduce your risk. This is going to pinpoint. This is going to give you the highest level of accuracy when they overlap. When your triggers separate, you've created two correction points. Your large chart may correct down to these triggers. Your small chart may correct to these triggers, which means that there's some indecision, which means that your accuracy is decreased, which means that even your risk is going to be greater because you're just not sure where the market's going to correct to. So when they're overlapping, they're favorable. And then we're going to tuck areas inside of those favorable large triggers to give you the highest chance of success, the least amount of risk. And then when they begin to separate, the indecision starts. But the rules say areas inside of triggers, so you can at least have a fighting chance if there's a line inside of it. And once these triggers really start to splay, guys, and once the areas begin to hover in the middle, man, you just don't have any idea. You don't know if it's going to be low or if it's going to be high. You don't know if it's going to be mid bands or if it's going to be something up here or something down here. And you have to kind of accept the fact that every pullback isn't going to be your pullback. And this is your highest chance of success. And with a little bit of study, you're probably going to be able to find a reason to take them in there and a way to manage it and reduce your risk. So we don't trade we don't trade tails, guys. We're going to trade pullbacks to areas inside of favorable large triggers. Rule number 3 says, when the rules are met on the large chart, I'm going to buy or sell a pullback, that little retracement in price. I'm going to use a limit order at an area, fibs, mid bands, yellow 1-to-1s, but I'm going to insist that those areas are inside of favorable large triggers. So how do we do that? How do we pinpoint? Are you guys ready? This is my favorite part of Nexgen, because it reduces risk, because it maximizes profit potential. When the large chart says go, when the large chart says strength, when the large chart says clear path, I'm going to turn my attention to the small chart. And guys, it's going to look like this. You're going to have this sinking feeling in your gut that the market's going without you. And I'm going to remind you that the market just moves in patterns all the time. And the patterns that we're going to take advantage of begins with waiting for a reversal bar. Because this reversal bar signifies the beginning of a pullback. It says, hey, look, the market's going to try to push down even though everything says up. This reversal bar is not your entry. We're not hitting buy now on a reversal bar, guys, because we're floating in the middle of nowhere. This pullback, once it begins, I have to identify my trigger lines, large and synthetic. Guys, it doesn't matter if your line is in the synthetic. It doesn't matter if the line is in the large. What I'm telling you is that when these are one on top of the other, riding piggyback, there's the least amount of room for these lines to be in there. Price hopefully is going to pull back. And when it reaches the triggers, this is not your entry. Your entry doesn't come from a moving average. Your entry doesn't come from this line, guys. Your entries come from areas inside of favorable large triggers. So once I identify my triggers, I'm going to identify the areas within them. Fibs, mid bands, yellow 1-to-1s. I'm going to create a window of opportunity. The window of opportunity for you guys, the point where the market is most likely to continue for a long trade, will extend from the highest point of support, in this case a mid band, to the lowest point of support, in this case yellow 1-to-1s, that are inside of the trigger lines. The trigger lines show me where I expect the market to retrace. The lines give it something to bounce off of, guys. It's like kicking a soccer ball hard as you can at a brick wall. The likelihood of it changing direction before it hits that brick wall is pretty slim. Physics are in play, right? But when it hits that wall, it's going to go the other direction. Equal and opposite reaction, right? Same thing. So you also have to remind yourself that if the trigger lines are the correction point, if the trigger lines are where I expect price to go, then this area beyond my correction point is not a part of the window. It's not a part of the equation. This window is where the market is most likely to continue because I have odds favorable momentum on my large chart. Because there's no areas to create a bounce on the large chart, I'm going to get in at the very top of the window. I'm going to activate a limit order. And guys, you're going to have this limit order waiting probably for a minute or two sometimes. Right at the area inside of favorable large triggers, right at the highest point, a tick or two above. And this becomes my entry for the highest probability trend trade. Is everybody good with this? And it's going to take practice, guys, and you need to go back and look at pictures. But the reversal bar signals the pullback. The triggers are where I expect the price bars to return, but the areas inside are where I expect that bounce. I'm going to wait for the market with a limit order at the highest point of that window. And guys, if I enter here and it pushes all the way down here, I'm still in my window. Totally cool. It's all right, Cindy. We had a moment. We were a little sad, but now that you're here, we can resume our joyous dispositions. In a short trade, when the market is going down, when the momentum is insane, when there's nothing in the way, I love it. I'm going to wait for a reversal bar. I'm not just going to jump in on a reversal bar, guys. This lets me know that hopefully there's a pushback. Actually, Andy, news in 34 minutes for crude, but we do have high impact news in 4 minutes. At the time of the reversal bar, I identify my triggers. Once I have triggers, I look for the areas within. I have one line inside of favorable large triggers, ladies and gentlemen. I have one point where the market is most likely to continue. I'm going to activate a limit order just below it. And this becomes the entry for the highest probability trend trade. This is what you're focusing on, guys, for the first 20 days. Because once you can pinpoint where the market is most likely to continue, you know without question where that market shouldn't go. This becomes your first stop placement. This stop placement is going to get hit. I want you to write that down. You will lose trades, right? Anything that wins 70 to 80% of the time has to lose 20 to 30. The key is to make sure you had the advantages, that you had the correct entry. Guys, it's all right. It's a normal part. It's a positive. It's cost of doing business. But the cool thing is, with all those advantages, you're more likely to get a reversal bar. And at this point, you're going to reduce risk above or below reversal bars. Guys, you can minimize risk dramatically by understanding the window of opportunity. And by trading those pullbacks, you also, new slide, guys, at the top of the move before the pullback, I've got 5 ticks to a fib. If I'm patient, if I wait for the pullback to areas inside of favorable large triggers, now I have 27 ticks to get to that fib. These great entries create manageable trades. Great entries reduce risk. Great entries increase profit potential. Great entries are what we focus on for the first 20 days. And guys, if you move stops behind reversal bars when the rules are met, it's not uncommon to take a 2, 3, 4 tick loser. And that's high probability trend trades, guys. That's what we focus on. Let's see if news does anything. I opened up the S&P. We've got high impact news in 2 minutes. Guys, are there any questions about the high probability trend trade? Are there any questions about momentum? Are there any questions about termination conditions? Guys, is this mid-band a termination condition? The large triggers are below the reversal bar marker. This is just a green squiggly line. News in 2 minutes. No, Mike, unless those large triggers are above the reversal bar marker, this mid-band is not a termination condition. I messed that one up a lot in the beginning. I really did. So check it out. We had odds favorable momentum, right? And essentially we have a clear path. Our triggers are a little split, and my only area is caught in between the triggers. Huh. That doesn't sound like rule number 3. Does that make sense, everybody? My area is caught in between the correction points. So if I take this short trade, I have to be prepared for it to come up to 22. It doesn't mean that it will. GWC, when I reach this mid-band, if my large triggers are above the reversal bar marker, then the mid-band is behaving as a termination condition. Did you guys see that quick hit? Did you see how quick that happened? That's news, ladies and gentlemen. So much that I think it's crashing my... It just froze and crashed. The data came in so fast it just crashed my freaking charts, guys. That's news. So GWC, that's what we're gonna use that reversal bar marker for when we hit a mid-band. Is if the market's moving down and it hits a mid-band, if the large triggers are above it, then the mid-band is a termination condition. And if everything is moving up and we hit a mid-band and the large triggers are below it, well then that mid-band is acting as a termination condition. And that's the gap theory. And guys, I'm resetting my Ninja real quick while I do this. Give me just a second, I'll load that back up. But that's one of the things that can happen. That news can be so erratic that even the system can't keep up with it. That's why I don't trade into high impact news. So guys, 3 rules. Keep it simple. 2 charts. Keep it simple. Post in the room. Track everything that you do. Let's go see where the S&P ended up. And then guys, the most important thing that you can do is learn those simple looks. Break them down individually. So I created this one. This is the how to do what you want to do kind of thing. Take 25 pictures. And most of you are like, Mark, I don't want to work that hard. Well, tough. If you really want to be good at this, if you really want to be a chart reader, if you really want to be able to speak to yourself in terms of advantages rather than wishes and hopes, take 25 pictures of strong triggers and then, right, know what's working against you as well as you know what's working for you. Strong triggers, weak triggers, clear path termination condition. Even that 50-50 look, that potential to break look, make sure that you know exactly what it looks like so you never think you have a clear path when you actually don't. And then take pictures of those high probability trend trade entries, guys. Take pictures of what it looks like to have a long, to have a short. But don't just take the pictures, guys. You've got to annotate the charts with the whys. Why are the triggers strong? Because the smalls are above the large, because there's space between the two, because my scissors are open. What's the advantage? The advantage is momentum. And that is rule number 1, guys. In this whole part, strong triggers on the first bar. What does it look like? Smalls above the large, larger wide, space between the two. Everything is green. This is strong triggers. This is odds favorable momentum. There's nobody in this room that's going to take 25 pictures, that's going to annotate each picture, that's going to talk about the advantage, that's going to screw up what it looks like to have strong triggers. But you have to know, what does weak triggers look like, guys? Anything can happen. Smalls inside of the large. Anything can happen. Smalls inside the large. Look what happened. Anything. These aren't the easy ones. These are the easy ones with odds favorable momentum. This is the I hope it goes trade. This is the holy crap, look at how strong it is trade. So take these pictures, guys, go through. And when you learn to break them down individually, when you learn to speak to yourself in terms of advantages, it becomes much easier to trade. So I'm going to give you guys this. I'm going to give you a high probability trend trade checklist with pictures attached. So you know what it looks like to have strong triggers. You know what it looks like to have weak triggers. You know what a termination looks like. You know what a clear path looks like. You know how to find the window, where your order goes, even the things that aren't a part of the window, guys. I'm giving you everything that you need to be successful. I'm also going to give you the trend trade checklist. These are the rules, guys, just laid out. Print this out. Put it on your desktop. Take your brightest crayon and hold yourself accountable at these trades. Never had anybody mark yes on all of these and do worse than 70%. Hold on. Let me say that again. Your most tasty crayon. I have never had anybody follow these rules to the letter and do worse than 70%. Guys, do me a favor. Raise your hand in the room right now if you are here to be a day trader for any reason other than to get paid. If you're here because you dig the adrenaline. If you're here because it just seems like fun and you already have more money than you know what to do with, that's cool. Take whatever you want. My goal is to get paid, guys. And the one thing that I know without question is that this is the easiest way to do it for a new user because it's simple, it's focused, and it has been proven to win more than it loses. So if you focus on what has been proven to win more than it loses, this creates an opportunity for you to find profits as you become a chart reader. And that's what this is for. This is your KISS plan, the Keep It Simple Sunshine Plan. I can't call you guys stupid, it turns out. HR said no. So the Keep It Simple Sunshine Plan. This is a plan that's a stepping stone in your journey. This is a plan that's going to teach you to read your indicators. This is a plan that's designed to optimize your chances of success with the high probability trend trade, guys. And it's going to be through your simulation, through your study, through your class feedback, through your continuous practice. You're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, that's a big, goofy, AI-generated way of saying, once you're a chart reader, you're going to see more opportunities. Once you're a chart reader, you're going to find different entries. But in the beginning, you've got to learn to be a chart reader. And I know that you guys want to be day traders, but I need you to be chart readers first. That's where success comes from. Define your entry. Let's not skip this one. The simple plan for consistency. Don't fight the large chart. Guys, the large chart defines direction. Why would you fight the direction? The large chart defines momentum. What makes you think your crappy little 2 contracts is going to beat the large crowd's momentum down? And the large chart defines these areas where people are making decisions, where bounce happens, where trouble comes from. Don't fight it. It's financial suicide. And then define your entry. And this is a big part of what we do, guys. Someone sent me a message yesterday. Do we use, was the beginning of the phrase. Do we use? Guys, there is no we in day trading. Unless you are, where's my power couple? Was it Iron Mike and Debbie? Unless you're trading with your spouse, if you're like Cindy trading with her husband, well then there may be a we. There may be a collective. You may bounce things off of each other. You may share a plan. My other Debbie and Bill. But guys, if you are sitting in the room by yourself, then you have to define your entry. And your entry is the high probability trend trade entry. Your entry is the entry that's been proven to win more than it loses. Your entry is the trade that creates confidence from the memory of success. And guys, great entries, mastering this entry in the first 20 days, that's all it's going to take you if you keep it focused. Great entries create manageable trades. And then that's the second part. If you're eating an elephant, and you know, I don't encourage you to eat elephants, but if you're eating an elephant, guys, and you say, I'm going to eat an elephant, it's overwhelming. It is so overwhelming. Where the only way to eat an elephant is one bite at a time because you can focus on one bite. You can focus on becoming great at momentum, and that'll take you a day. And then you can become great. Focus on not trading into areas. This will take you 2 or 3 days of study. And then you can get great at finding that best entry. And guys, this one takes a little longer because you begin to feel like you have a stake in the game. You begin to feel like, oh my gosh, there's a chance to lose. Who cares? It's simulator. I'll lose thousands on simulator just for the fun of it, just to prove a point. And then you're going to have to manage it, guys. So the way that your entries are very mechanical, the way that your entries are like super focused, if then, your management can be the same way as a brand new user. And your management is 100% dependent on your ability to understand where the market is most likely to continue. This management plan is in the spreadsheet that I give you. This management plan isn't designed to strap you into small dollar trades. You will craft a plan tailored on your ability to read your indicators, right? You're going to create a different management plan once you're comfortable, but I'm going to tell you guys right now, managing trades is going to scare the crap out of you initially. Managing trades is going to be terrifying because what's going to happen is you're going to start to think, oh my gosh, I don't trust this methodology yet. I haven't seen it enough. I haven't practiced it enough. And you're not going to hold for those moves, right, Morgan? You're going to jump ship quick because you're scared of losing. Even on simulator, you're going to be scared of losing, and that's okay. It's all right. It happens. I'm not mad at you. I did the exact same thing. But what you need to do is allow your management to be very pragmatic. Allow your management to be very if-then. If this happens, then I'll do this, guys. And that's what this management plan is designed to do for you, is to really take it. If I enter the market where it is most likely to continue, if I take that great entry, if I'm in at the bottom of the window of opportunity, my only option is to put my initial stop where the market shouldn't go. My only option is to have that stop 4 or 5 ticks beyond the window of opportunity. And I'm out of control here. There's nothing I can do. I'm either going to get stopped out or I'm going to get a reversal bar in the direction of the trade. Those are my only 2 options. So if I take the correct entry, then I either get stopped out. That's okay. I'm going to post it in the room. We're going to talk about it. We're going to make sure my advantages were present. Or I'm going to get a reversal bar, a confirmation bar in the direction of the trade. All a reversal bar is when all of these are red, reversal bar means up. It gets me looking for the entry. When all of these are green, reversal bar is down. It lets me know that the market's going with the trend, going with the momentum, going with the clear path. It's beginning to do what I want it to do. So I'm going to put my stop 2 ticks above that reversal bar. I'm going to reduce my risk. And then there's nothing for me to do. I'm either going to get stopped out for a smaller loss or it's going to hit my first target. For you brand new folks, that first target has been put at $100. You're trading 2 contracts. You're into, you're out 1 at $100, guys. That's $100 in your pocket, $100 in your account, even if it's monopoly money. That's $100 that the market can't take from you. That contract is no longer in play. That $100 just made your palms dry up, right? They're not sweaty anymore. That $100 got rid of those butterflies in your stomach. That $100 created some confidence, guys. That $100 feels good. And that $100 is creating trust in the idea that when the advantages are present, you can make money. So you're going to take that $100, you're going to leave that second contract on, and you're going to go break even. If I get paid at the first stop, I'm going to go break even. I'm going to have 0 risk on the trade. And this is going to allow me to learn to trust the large chart. I'm not a chart reader yet. Management's a little difficult. I still get anxious. So I'm either going to get stopped out, break even, which I'm telling you guys doesn't hurt too bad, or I'm going to hit my second target, guys. And your second target is only $200 from entry, which means that on 2 contracts, 1 trade, the most basic methodical way you could ever take a trade, you just made $300. Some days, that may be the best that you can do is 1 $300 trade or 3 break-even trades, right? And is anyone else like me? You're like, man, $300 is crap. How am I going to build a $1 million trading empire around $300 a day? Guys, $300 a day is a $1,500 week. That doesn't sound quite as bad, right? And that's a $6,000 month. And I don't care how much money I have in the bank. When I spend $6 grand, I think about it, right? When I make $6 grand, I think about it. And then that translates out to about $72,000 a year. That's it. Or we could do the $300 a day times 252 trading days a year. Do I have any savants in here that can hit that on the calculator real quick? $300 a day times 252 trading days a year. It's actually a little more. 75, 600, guys. So that is off one trade going well, right? But there's trade copiers out there. Have you guys seen that? Where if you take $300 on one account, a trade copier on 10 accounts turns it into $3,000 for you, right? And if you have 20 of those mirrored accounts taking the most basic, suddenly it's a $6,000 day on that $300 day from the same trade, from the same management. Mike, I don't use them. I don't use them. There's a lot of people in Traders Chat that do. I hear things, I don't even know the names. One of them is Replicanto. I like it because it reminds me of a reptile. But I would say do your research. I would say go over to the Traders Chat room and just ask a couple questions. And people are very, very, very willing to share their experiences. I'm still not sold on them because I hear horror stories, but I hear not enough of them, but it's enough to, I'd rather just trade more contracts in one account. Because if I'm always taking the trade, if I always have a statistical advantage, I'm pretty good, guys. So, high probability trend trade, let it be easy. When you come to the spreadsheet, whoops, that I dropped in the room, there's two entry sequences for you guys that go through and talk through it. And I really do believe entries is the most important part. You have to have the advantages on the large chart. That's got to be the first thing that you do. And you wait for the reversal bar, and you're going to find your trigger lines, right? Because that's where we expect price to correct. And then you're going to find the areas inside of the trigger lines because that's where we expect price to bounce. And you're going to activate a limit order just below the lowest point. Not so bad, John, right? And this is the part that people don't understand about day trading. My brother used to do this. My brother used to say, if Elon Musk called you today, ladies and gentlemen, if Elon Musk made your phone ring and he said, hey Cindy, hey Hammett, hey Ty Man, hey Z, hey Adriana, William, Bruce, Iron Mike, Algo, I'm going to give you a job that's going to pay you $200,000 a year, maybe more with bonuses. But here's what I need from you. You're going to sit at a desk for 8 hours a day. For 480 minutes a day, you're going to sit at a desk. For 48 minutes, when this set of criteria is met, you're going to follow a plan and you're going to execute. And that's going to be your job. Is there anyone in this room that would say, hell no, I'm not taking that job? Every one of you in this room would say, absolutely, I will take this job. I will do this job. I will be patient. I will click when it's the right thing to do, and I won't do anything when it's not. And what happens is because you're working for someone else, you guys are more inclined to follow rules. And I don't know why that is, right? And the second it becomes an independent business, the second you're in control, the second you get bored, the second you get anxious, the second you create an opinion, you start going outside of what gives you the advantage, what gives you paid. Every one of us would be fired from that job if we approach that job the way we approach trading. And this is why I say over and over and over and over and over and over that 90% of your day will be doing absolutely nothing. 90% of your day will be spent reading indicators. 10% of your day will be getting paid more often than not because your rules are met. And once you learn this one, guys, this is the keys to the kingdom. This is the golden goose. Once you accept this and embrace it, I agree too, Jen. Accountability is huge in the beginning. You need someone to hold you accountable. That's what I'm for, guys. I'll never be mad at you. I'm going to be like your grandma. I'm just going to be disappointed if you don't post. But the quicker you accept the idea that 90% of your day is doing nothing, the easier trading becomes. A true story. So I'm going to drop in the room the chart reading 101, the high probability trend trade with pictures, the high probability printable that you can put on your desktop. I'm going to drop another copy of my spreadsheet in there, and I'm also going to drop the PowerPoint that I use every day. I'm giving you guys everything that you need to be successful right now. I'm giving you the world's greatest hammer. The world's greatest hammer. You've got to learn how to swing it now, and you can try and do it on your own, or you can let me help you. That's going to be up to you guys. And I'm going to give you one more. You ready? I'm going to give you the KISS plan for the 50-50 trade, guys, for that one area not broken. When the areas have the potential to break, but they're not broken. Does everybody remember that look, that 50-50 look, where the small triggers smashed through the area, but the large triggers haven't made it? So this is not a clear path, which means that this can never be a high probability trend trade. Guys, this is a medium probability trade that I just gave you. And a medium probability trade means, everybody should build one of these. A medium probability trade means that most of your indicators line up for a trade however a small issue exists. And guys, the idea on that 50-50 trade is that you do not have a clear path. You only have the potential for a clear path. So this KISS plan keeps you focused on these two items. And it says that it must come from a good top or bottom, from a termination condition that creates a reversal on the large chart. And if you don't understand this lesson from the high probability trend trade, how are you ever going to successfully take the 50-50 trade, right? See how that works out? Order of operations. You have to have odds favorable momentum on both charts. If you didn't pick up that lesson from the high probability trend trade, you're going to struggle with the medium probability 50-50 trade. If you don't know what divergence looks like from your study on the high probability trend trade, how are you going to take the 50-50? Guys, notice that it says if there's divergence, you're not taking the trade. You have to have no divergence on the small chart. Divergence kills more 50-50 trades than anything else. But if there is no divergence, you're going to enter at the area, the same way you enter the high probability trend trade. If you don't understand that, how are you going to take the 50-50 trade successfully? It reminds you that divergence kills the trade. Guys, I can't stress this enough. And then look at that. If divergence prints, exit the trade. Is there any question in anybody's mind what kills a 50-50 trade more than anything else? Do you think it's divergence? I think it is. So as a brand new user, if you want to optimize your chances of success, anytime you have a 50-50 look, guys, anytime these areas only have the potential to break, divergence can kill it. Anytime it only has the potential, divergence can kill it. Look at that right there. No divergence. Let's make some money. Divergence prints. Oh, shoot. Shoot. I saved it. 90% of your day, guys, is spent doing nothing. Price reached resistance. The triggers remained below. There was no long trade into that area. Price reached support. Triggers remained above. There was no short trade into that area. Only the small triggers broke above, not the large. Still not a clear path. Price came right back to support and a divergence low, and the triggers remained above. And look at that. Thank goodness I didn't hope the short works. Can you guys give me a why before I take my break? You've got to learn these three very simple concepts, guys. It's going to keep you out of a bajillion, and that's a technical term, a bajillion trades. And I really believe in my heart of hearts that being successful as a trader isn't the money that you make on the correct trades, but rather the money that you don't give away by forfeiting advantages. Guys, making $300 is awesome. But if I gave away 1,000 trading into areas, well, then I'm still negative. So we're developing trust. Guys, I'm going to take 5 minutes. Oh, before I take the break. Okay, just why before I take the break? Right on. Right into resistance. Triggers are below. Guys, you're witnessing rule 2. Identifying consolidation. Identifying a range. Look at this. Burk. Where do you suppose I should let the market get to before I consider taking a trade? Above the problem here or below the problem here. And as long as I'm in this range, I'm on my hands. And it looks like it's going up. We'll see what happens. But that's where these rules create huge advantages, guys. So I'll be back in 5 minutes. Go stretch your legs. Don't stare at your charts. When I come back, we're going to look at the charts that you guys have posted. We'll talk about advantages. We'll read your annotations. If you didn't annotate well, I'm going to warn you right now. I'm going to go through the whole spiel on why it's important. I'll see you guys in 5 minutes. Guys, let's take a look at your greatness and the things that you did. So I'm going to start. I've got a couple that were posted yesterday. And I don't mind going after whatever was posted yesterday, guys. It doesn't bother me in the least bit. One of the things that I like to do is because in this chat box, I have to go up and down to see things. I have to scroll to the very top of the chat box to retrieve your pictures and then scroll all the way down to answer your questions if you have them. So if I ever miss a question, if I ever miss a comment, guys, let me know. Don't let me get away with it. What do you do when you set your limit order inside of favorable large triggers and the chart moves and the favorable large triggers are no longer overlapping? Do you keep the same entry point? Do you move it? So, Mike, can I rephrase your question? Mark, what do you do if you activate a limit order, right? And I'm waiting to buy or whatever. I'm waiting for that retracement to buy. And then I realize that something changed, that my rules are no longer met, that they're no longer overlapping, that now they're here and here and here. Do I delete it, Mike? If my rules are no longer met, then I don't do it, right? And it's hard to do that because you get excited about a trade. You get excited about a long trade. You get excited about a short trade. And I'm looking for where... Do you have a picture that goes with that question? I hope it's not in crude oil because crude oil hasn't had the rules met yet. But sometimes in a strong move up or down, they do, Mike. They just don't do it as fast as you want, right? They do. They just aren't going to do it as often as you want them to. That's the challenge. From 9:51 to 10:31, right? We haven't really had rules met. Would you agree, Mike? Feels like forever. That's 40 minutes. Feels like forever. Okay. So Mike, this makes more sense to me. Check it out. When you activated this limit order, Mike, it was probably a couple ticks above the mid band, right? Probably right about here you were waiting for it. Cool. And then as everything continued up, the mid band did as well. And you hit a termination. You were termination full on. So Mike, if you want to go with the flow, if you will. So if I have a limit order right here, and that mid band, if I had it down here and that mid band keeps moving up, I just have to click that line and keep it 2 ticks above it, right? I have to click that line. See how the mid band continued up? So I'll adjust. And I may move that stop 4 or 5 times. Or move that entry 4 or 5 times, right? This is one of those 50-50s from a good bottom. This is the breakout of the range, guys. And it's either going to be amazing or it's going to be horrible. And my stop is 4 or 5 ticks beyond. Not a clear path, but I do have momentum. I have the potential to break. I had an area inside of favorable large triggers. And this represents my first trouble spot. $150 in the distance. This represented the $100. There's a second lower divergence on the potential to break, and it just took me out. But it's the same thing, Mike. It's the exact same thing. If you're using that mid band is going to move. And that's just kind of one of the things that you begin to see. The mid band is gonna move up with it, so you may have to readjust. But what won't move up are these fibs. What won't move up are these 1-to-1s. And if the triggers move up and then your areas are suddenly below, then I just cancel the trade. Does that make sense? I don't have the ES up right now, but so I may have to follow a mid band a little bit. But a fib and 1-to-1s, yeah, just cancel when the rules aren't met. But if you don't know that idea, like if you activate this one right here and it's in the perfect spot, you may have to click it up a little bit because the rules are still met, right? If we're ignoring the termination condition. It's when this mid-band falls outside of the triggers. That's when we'll cancel. They were for a short time. Right on. Great question. All right, Jonathan, I loved this picture. But first and foremost, well, that was great timing because your post is the first post. Jonathan, don't get mad at me, my friend. But why did you think this trade was good? What did you see? Why did you enter? What were your advantages? And I'm telling you right now, and I'm going to sound like a broken record, guys. Your annotation was, I thought this was a good entry point and it worked, made $100 in sim. I almost made this my first real trade because it looked safe. Please comment. So Jonathan, why did it look safe? Why did it look like a good trade? What made you feel like this was the right entry to get paid on? And I'm not questioning your trade, but how are you going to do it again if this was a good trade, right? So I always start with, where am I coming from? You're coming from a great top. Your read was awesome. That's a termination that creates a reversal. That's a strong top. That's the precursor for great things on every level. You also had odds favorable momentum, so you did have that first rule met. But here's where I think you dropped the ball. You didn't have a clear path. Price reached the midband. The large triggers were a full bar away. That's a termination condition. That's where your midband is a termination condition. That's where rule number 2 is no longer met. Does that make sense? And that's one of those lessons that take a little bit of seeing the patterns, being in the moment to recognize. But the clear path is gone. And then the other thing is if you didn't believe in the clear path being gone, you also had 3 divergences in the same price range, which is another textbook 100% lesson on when the clear path is gone. So if you didn't believe the mid-band, they reinforced it right here with 3 divergences. So rule number 2 is not met, but that's okay, right? You might be saying, I don't have a clear path, but my momentum is so freaking amazing and my entry area is so clearly defined that I'm willing to take a shot. Exhibit A. The momentum is so overwhelming and the entry area is so well defined that I'm willing to take a shot. But what happens, where's that picture I took, is that you don't have areas inside a favorable large trigger. So rule number 3 is not met either, which means that on this particular trade, you're hoping for momentum to carry you the distance. Does that make sense so far? And if you're going to hope that momentum carries you the distance, you should at least have odds favorable momentum on a small chart like you did right here, right? And look how that momentum pushes. And now we're just seeing that change happen. And Jonathan, the reason that I went so in depth on this one is because if you guys get in the habit of always addressing 3 very basic rules every time you take a trade, if you get in the habit, whether they were met or not, of writing strong triggers or writing momentum, clear path, and entry area, writing out the rules for it, what happens is that you can almost never have to ask if this was a good trade. Because there are no good trades, guys. There are no bad trades. There's only trades that either fit the rules or do not. And the rules have been tested and proven to win more than they lose. So if it fits the rules, it's still not a good trade. It's just a trade that has a statistical advantage. It's a trade that has more likelihood of winning than losing. Does that make sense, everybody? This is why annotation is so key. Because, Jonathan, if you go back, and I'm just using your name because you were nice enough to post the picture. If you go back and you write these things on the chart, if you try to keep it as basic and simple as you possibly can, what's the likelihood that you're going to take this short trade? If you value this trade on the one time that it made you $100 rather than the likelihood of it failing miserably more often than not, then you're going to continue to take that trade and your luck will run out. So great picture. It's okay though. And guys, I hope I don't sound put out because this look right here, Jonathan, is the best look ever for looking for a setup. This momentum is freaking amazing. And it's that damn rule number 2 that stops the process. And then you have to let all that adrenaline settle. And you got to be okay with the idea that maybe this isn't my trade. I was waiting for it. But until it closes that gap back to these triggers, I'm going to sit on my hands and I'm going to wait a little bit. So great post. And then Paul, great termination, odds favorable, potential to break. You take the low entry, which is okay. And then when it turns into that perfect trend trade, you're like, I'm going to add contracts. Freaking amazing. And then you get out at the first trouble spot. 3/4 of your position is gone at that trouble spot. With this look on the 50-50, for me, second divergence is enough to take me out. From a great top, one divergence doesn't freak me out so much when everything is cool. This is my exit condition on a 50-50, Paul. Yours may be different. And then 3 divergences, holy shnikes. There's no way you could keep me in unless I'm just hoping that my rules don't work this one time. But yeah, sure enough, 3 divergences, pow. And you just had a little late reaction there. But the cool thing is that if you get paid on 3 contracts, you can be a little loose with that last contract, right? You can give it a chance. Great trade, Paul. And then strong bottom, odds favorable, pull back to the mid band right at the top of the window. And this is a pretty good pattern, and I think John did this one yesterday. Guys, if you get divergence from the high, especially on a 50-50, it's all right to wait for a reversal bar because this pivot stop out, Paul, is likely to create this pivot stop out. Does that make sense? Guys, this is a small chart pattern that happens a lot. A pivot stop out above me when I'm looking for a long trade and I've got all this momentum typically results in a pivot stop out down here. So Paul, I'm looking for areas inside of favorable large triggers at that low pivot. Does that make sense? Can you guys hear me? Am I talking to myself? I might be. Okay, cool. And this is a pattern that actually repeats itself enough. It's pretty cool. You're going to find it in the spreadsheet as well, guys. You're going to see that same idea that when everything says down, little pivot stop out here cranks right up into a pivot stop out here. And it just helps me either with stop placement or maybe if I miss this one, instead of trying to jump in early, I find myself letting it take out that previous pivot. And it's a really valuable tool, recognizing this pattern, and I bet we'll see it more than once today. And then here, Andy, it just missed you by a tick. Dagnabbit. Everything says up, momentum, clear path. This one didn't get you, so you're like, I'm going to give it 4 ticks this time. It's not going to miss me this time. Good luck. And these are frustrating sometimes, guys, when they don't catch you. And notice that this one right here is a 50-50 trade with absolutely no divergence. And it pulled right back to the tick to that area right at the triggers. That was the money trade. Get paid. That was the secondary trade. Just didn't quite get you. And then you're looking for the third shot there. Nice job, Andy. And then Paul... That was the good one, right? I love that annotation. Clean and true it is. And then we start getting dicey. Then we start trading into areas, right? And then we start saying, oh man, I'm not sure, I don't know. This one right here, Paul, dig it. You're still inside, right at the bottom of that window. You've got room. It might stop you out because terminations are creating a bounce. And then by the time I get up here, I'm just not even in it. I don't even care. I'm into terminations. I might take one shot into a termination if there's no divergence, if there is separation between the small and the large. But here you don't have a clear path, right? You don't have odds favorable momentum. You have a visual loss of momentum. There's a lot of things going wrong here, guys, and these will go up a little bit every now and then to make you believe that you should still be taking this trade without the advantages. But that's one that's going to lose more than it wins. And that's the same one. And then, Mike, that was your picture. And then that's the one I posted. So let me scroll up and let's go to the next round of pictures, guys. I'll try to get a few of them in there. Let me see where we're at. And guys, just a reminder, since I have you in class, you're going to get bots asking you for money. You're going to get bots asking you to pay them in crypto. You're going to get bots that are asking you to do all these different things. Guys, don't fall for the scams. Nexgen will never ask you for money. Nexgen will never unsolicited reach out to you and say, hey, we have an automated trading system that we never told anybody about. Send me $5,000 and we'll send you 80% of the profits. I will, Jonathan. But there's other people that post it as well. If you have to leave, let me know. I'll push you to the front of the line. Otherwise, I try to get them in order. And there's some people in between them. The post that I had of yours was from yesterday after class. I'm just now getting into class. Right on. So this was Steve, right? G'day. Termination creates the reversal. I love everything about it. I hope that's not offensive. Well, I'm going to pretend to be concerned that it is. Cool. So what we're looking at, right, is we're looking at that potential to break but not broken, right, Steve? And that's the one thing I want you guys to recognize. It's not a clear path yet. Not here, but when we get here, we're like as close as we can it'd be, right? So you take the first little snapback. I love it. Bottom of the window, pop. Get in, get paid. And you get that second divergence. And then, Steve, this is where you have to make a decision. Are two divergences enough to keep me out of a trade when I have momentum and a clear path? For me, the answer is no. For me, the answer is no. Because my trigger's cleared support and my path is clear, because I have momentum, I'm pretty cool with two divergences. It doesn't freak me out, especially if they're going down. Especially, let's make this bigger because I'm going to turn this, we're going to revisit a lesson, right? Large charts, clear path. You already got in, right? You already got paid. You chose to exit, no worry at all. And here's the thing, Steve. This mid-band and fib inside of favorable large triggers is 100% rules met for this look. Does that make sense? When I was racing motorcycles in a different life, they used to tell me that the difference between an expert and a novice is your recovery time, how quickly you come back from perceived mistakes or things that scare you. I don't mind this exit at all. I think it's great. I think you got paid. You didn't give any up. And then your next step, Steve, the cool thing is that you're going to look over and go, wait a minute, my rules are still met. This is still a rules-based entry. I'm just going to put my contracts back on. Absolutely, Pete. One bad shot can ruin the whole day, right? If you let it. And then, Steve, can we talk about that pattern that we saw on Paul's chart? A pivot stop out here when the rules are met on your large chart. Look at where price went to. it took out that previous pivot and then it started down. And that previous pivot happened to line up with areas of resistance inside of favorable large triggers. I love this look. I love that pivot stop out up top when my rules are met. What a great place for an entry. And I don't know what the market did, but that's one where I would have been very willing to lose that trade because of all the advantages. So great picture, man. Great trade. And if the goal is to get paid, you nailed it. Nicely done. And then this one, holy crap, just rock star. But check it out. Pivot stop out again. Man, that's 3 times, guys. Odds favorable, everything is up, life is good, and you have those split triggers. Can I use your chart as an example? Steve, do you mind? This is pretty cool. So split triggers creates a little indecision, right? We talked about that. Where's it going to correct to? Is it going to go here? Is it going to go here? So here's where a little pattern recognition pays dividends, Steve. When I have odds favorable momentum and large chart says go, a pivot stop out on the small chart typically results in a pivot stop out below it, right? So here's my pivot stop out, and then there's my other pivot stop out. There's where it takes out the previous price. So what does this do for me? One pattern helps erase a little bit of the indecision. It completely pulls this upper one out. There's no way in hell I'm getting in here because this pattern typically creates this pattern. Well, that pivot stop out's in between triggers. It does have support, but there's no way I'm getting in before it takes out that pivot. Maybe I wait for a reversal bar. Maybe I just get into the fib. But one pattern brings out the next pattern. One pattern sets you up to create a little clarity. And guys, that's chart reading, and that's a little more advanced. And then Steve, beautiful stop placement. Awesome letting that momentum take you right up to trouble. Beautiful trade, Steve. Nicely done. Cheers. All right, let me scroll up and let's see who's next. All right, that was Steve. So we got Paul. And then we'll get Pete and then Jonathan's second trade. So Paul's getting us going here. I'm trying to do a couple at a time so I can keep that chat box open and give you guys answers if you need it. Let me figure out where we're at here. 8:46. So we're right about here, and you took a short. So Paul said, did we? That's okay. I don't remember going over it. We'll look at it again. So guys, here's one of those opinion things. And Paul's, he knows this. He even posted in the room. He knows what he did. So let's let the large chart lead the way. Large chart says up. Large chart has momentum. Paul went short. Why did Paul go short? Paul went short because he was thinking, Mark, 1, 2, 3 divergences may reverse the market. Is that fair, Paul? 3 divergences may reverse the market. So you went short right at those areas. Totally fair. And you got run over, right? A little bit. That's okay. Guys, when we say don't fight the large chart, well, when I say don't fight the large chart, when I say don't fight that momentum, right? It's tough. It is so tough. And here's the other thing. Let me blow up this picture a little bit, Paul. Your short is directly into one-to-ones with every trigger above it. So you actually traded into a termination condition too. So not only did we fight direction, did we fight momentum, did we fight areas, we formed a small chart opinion. Still hanging on to sin, son. I love it. But it's okay. Guys, I've taken this trade because of the divergences, because of the trend change, because of the smalls getting below the large. I've taken this trade. I actually have it in my plan that I can take one shot at this look. If it works, cool. It's usually a huge winner. If it fails, just a little bit, right? Lose a little bit, and that's okay. So Paul, I'm not mad at you for this one. I think there's also a thing in my plan that says never fight large trigger. Never fight large chart momentum. So if I'm going to take this look, Paul, I'm looking for something like this on the large chart. I'm looking for those weaker triggers. I really want to see maybe even a roll on the small triggers, and that's going to escalate my advantages a little bit. Ah, what happened? Pete, was this you? Okay, so we did talk about that one. Pete, did you reload your data over here yet? How can you trade this chart? Ah! But yeah, we did go over that, so that was great. Good lesson there for sure. All right, Jonathan, we're going to build good habits today, my friend. And the first one is we're going to talk with the most dangerous words in trading. You ready? I thought. I thought rather than indicators, rule set. Believe me, I'm the king of it should. I thought I should try a trade. Please pick this apart. I will. Jonathan, are you with me, my friend? So where are we coming from? We have a termination, the mid band, reverse the market. Jonathan, I don't see any annotation on your chart. And I'm telling you, man, I've already asked politely. Help me out. There's nothing on this one either. So you have a strong bottom. The precursor for the best of the best. You know what? Let's put you to work, Jonathan. Did you have strong triggers? I know whether or not you did. Do you? Did you have strength in the triggers? Were the smalls outside of the large? Were they wide? Were they angled in the direction of the trend? Okay. Did you have a clear path? Had price reached an area yet, or did you still have room to your target? So now what we're going to do is we're going to focus on you thinking through the trade. Did you have a clear path? Guys, feel free to jump in and help. Newer users too. Doug, Jeffrey. All right, Jonathan. So large chart says go, right? Large chart says giddy up. 100%. Beautiful read, Jonathan. Amazing read. Let me write out those damn rules. Rule 3 says buy a pullback at an area inside of triggers. So let me see. There's my entry. Not even inside of triggers, right, Jonathan? But let's do this. There's a mid band right at the bottom. I'm struggling here. Gotta be smarter than the shapes. So Jonathan, where was your rules-based entry? 1 or 2? I'm like the eye doctor now. Where was the rules-based entry? 1 or 2? And guys, I'm doing this for a reason. 2, absolutely, Jonathan. So you're in at 2050, and you're stopped out at 16. Your correct entry is right at about 1750. So that's 3 points. That's $300. So the correct entry, and this one didn't work, Jonathan. It was a beautiful trade that would have stopped you out anyway. But here's the cool thing, is you could have been stopped out for maybe 8 ticks on this one. Maybe 8 ticks. You were stopped out for approximately, oh my gosh, 20 and 4, 30. Oh my God, that's math. But it's about 18 ticks. So this is, and the lesson here is that they're not all going to win, Jonathan. They're not. But if you start going through the process, are my rules met? Your large chart is everything that I could ever hope for in a trade. Your large chart is everything that I look for in advantages. Your small chart is even everything that I look for in advantages. But the difference is waiting for the pullback to the area inside of favorable large triggers. What this does for me is it gives me the opportunity to minimize my risk. It gives me the opportunity as well, and let's do this. This box represents your distance to your target from your entry. This box represents your profit potential from the correct entry. Pretty significant, right? So why do we wait for these pullbacks? And we're training ourselves through rules right now, guys. We're training ourselves through saying the rules, through writing the rules, through trusting the rules. And that's okay. That's what we call the fear of missing out, Jonathan. And we've all been victim to it. The fear of missing out is, it makes us make bad choices. The fear of missing out will get us in early, guys. And getting in early doesn't guarantee. It doesn't guarantee a win. What it does for you is it just guarantees a bigger loss, right? Or getting in late without the proper advantages. The fear of missing out is very, very real. But Jonathan, I really want you to start getting in the habit of writing these 3 rules on your chart. And this is for everybody, not Jonathan. Because if you start talking yourself through these rules, if you start creating this habit from day one, in order to take a trade as a brand new user, I need momentum, a clear path, and an entry area. I've got to write on my chart what I see. I've got to write on my chart what I see so that I can either repeat the advantages or learn how to avoid or fix the mistakes. So, Jonathan, awesome post, great large chart read. Unbelievable large chart read. That is everything that I look for. The only learning opportunity here is that the more you talk about the whys, the better you're going to get at what you're doing. So what went wrong? Smalls are outside. Has nothing to do with the bars. Smalls outside of the large, right? You have a clear path. Synth trig too far away did have a clear path and some momentum. So just going back to that, Jonathan, by writing rule number 3 on your chart, you realize that it has nothing to do with the synthetic trigger too far away. It has everything to do with not trading from the area inside of the trigger. Beautiful post. Thank you for sharing that. I think that's a good one. Odds favorable momentum, but haven't smashed. So price is just dancing around. Are you talking about right here? Rob, when you were talking about it being a little stuck? As it comes into the areas, you can see on the smaller, faster chart all that indecision. And I think that's what Rob was posting. When the path isn't clear, guys, decisions are being made. And when decisions are being made, you're going to see it like a seismograph on your smaller, faster chart. GWC, I love this one. Guys, you see those weak triggers? Everything rolls. He takes the little snap back. Guys, this is a momentum trade. And he manages it beautifully. GWC, way to take a little advanced chart reading. Termination, triggers roll. Weak triggers typically get us back to the mid-band. You found your opportunity not trading into the area, but rather from the areas, and ride that momentum all the way down to the trouble area. I love everything about that trade. That's where you guys that are learning to read charts are headed. Jen's there. Termination good, smalls below large. That's your momentum style trade, Jen. And you'll probably work your way into this. Guys, when the large chart is turned, when these small triggers are coming down strong, you'll begin to find opportunities when the small triggers break the area and snap back to ride that momentum. That's a trade that we teach. It's a little more advanced, but it's a momentum style trade, and there's the rules for it right in the trading guide. And we talk about it in class a little bit. But Jen, do you see how GWC caught it? You saw it, you're just not comfortable with it yet. Nice job. It's a great read, guys. The large chart leads the way. And once you understand momentum, once you understand what you're getting into, you'll start picking out different looks on that clear path. Just did this live. What'd you do? Let's see. Termination condition for the loss. Termination condition. I can't find any rules met there. Still a termination condition. Traded into it again. Still a termination condition. Traded it into it again. You didn't think I'd see those, did you, Jonathan? Not one mention of rules, not one mention of clear path, not one mention of momentum. Why did you jump in? And if you just jump in because of momentum, what's your exit rules? Because this market looks like it's on its way back to an area of resistance inside of favorable large triggers. This is where writing rules helps, guys. Potential to break. Your entry comes from up here. And all of this, rule number 2, keeps you out of it. All that, and that's okay. Guys, right now this class is designed to build habits. This class is designed to build good habits, not only on what you're reading. Don't do it quick just to talk about it, Jonathan. Because you're not giving me anything to talk about, if that makes sense. You're making me do all the work. I know how to do this. Ty Man, right here, brother. I know how to do this. So what if you had written termination, 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 termination? Chances are, Jonathan, that you would say to yourself, holy shit, trading into terminations doesn't seem to serve me well. Right? That's my goal. That's why I want you writing it. And the same way I want you to write, odds favorable momentum creates an advantage. The same way I want you to write that if I jump in with odds favorable momentum, and how is this at 0? You don't even have your most current. See that white arrow? You're in this trade, but you can't even see the most current bar yet. So always make sure that you see that highlighted. You're missing bars on your small chart. That's a good thing, guys. If I go like this, I'm not looking at the most current bar. Make sure that you can see the most current bar. So here's odds favorable with the potential to break, right? It's coming from a good top. I do have areas inside of triggers, but I have divergence. I have to make a decision, guys. Am I willing to take a short just below resistance inside of triggers with the potential to break? If I am, this is my entry. If it fills me, come on, fill me. If I decided to take this trade, my stop goes, let's see, 1, 2, 3, 4 ticks above the top of the window. My first target is at 08. My second target is at 98. Guys, is this a high probability trend trade? That's okay. Jonathan, you're not going to see it in the beginning. Adrenaline's going to take over 100%. Not a high probability trend trade, Cindy, because I don't have a clear path yet. I have an area with the potential to break because of momentum. I'm coming from a strong top. I did have divergence, but I had a very clearly defined window, and I knew exactly where my stop had to go. And if I get a reversal bar, if it blesses me with a reversal bar, ladies and gentlemen, my new stop will be right there. But until I get a reversal bar, it has to go there. I've got 8 ticks of risk on a medium probability trade. A medium probability trade that has the advantage of momentum. A medium probability trade that's coming from a termination condition that created that reversal. A medium probability trade that's coming right from the low point where the market is most likely to continue. Is it a guaranteed winner? That's the question. Am I guaranteed to win this trade? Of course not. Of course not. Do you guys want to let it play out? I'm in it. There's my first target, guys. My reversal bar is my first target. There we go. First target hit. I'm break even in the trade. So what's going to happen, guys? I'm either going to get stopped out. Or it's going to go to my second target. I have absolutely no say in it. But let's talk about what we see. Do I still have momentum, everybody? Hell yeah. Do I still have small triggers down, large triggers down, synthetic triggers down? Do I still have the potential for this area to break? Guys, this is where management gets a little spooky because now you feel like you have something to lose. But here's the cool thing. Guys, I already made $300 on this trade. I'm break even. I'm just letting it play out. Can anybody see anything wrong with this trade right now? Now all my triggers are below the area, right? My small triggers are down, my large triggers are down, my synthetic triggers are down. This is where you're going to start managing. If this is a pivot stop out, well then my stop is right where it may make the market come to. Let's see if that happens. So I might take that into account. If I have odds favorable and a clear path and a pivot stop out forms, I get a second divergence, it might take out 18. But I'm going to let this stay KISS plan, guys. I'm in. I've already made $300 on my 4 lot. I only have 1 contract on. I've got 0 risk on the trade. And guys, if you get a little spooked, right? Pay for commissions. Why is my target not here? Because my rules say that I am going to exit at $100. And here's the cool thing, Jen, is my $100 was before I ever even got to trouble. How kick-ass is that? Great entries create manageable trades, my friend. And nothing has changed except this market's continued to go down. That's it. I'm not deviating. I'm not moving stops. I'm not breaking rules. I'm not creating opinions. I'm not getting fearful. It's either going to hit that $200 target or it's going to get me for break even, guys. These are my only options. At this point, I don't care. I've already been paid. I have nothing to lose. New users, are you with me on this? You're going to go, oh my gosh, I don't want to give it back. Let me put my stop right here and hope that it doesn't get me, right? It's going to tick up and get you, and then it's going to drop. Or let me put my stop, maybe a reversal bar takes me out. Or maybe I'll put it behind this, even though it's not a pivot. Or maybe this or that. Guys, just follow the plan in the beginning. See what happens. Write it out. It's simulator, right? You're on simulator. It doesn't matter. The only thing that matters is that you take this trade. The only thing that matters is that you take a picture. Take a picture during the trade, right? Annotate it. Term creates more down. Good stuff. I don't care what you write. Odds favorable momentum. Woo! Right? But then here's the part that you really have to write. Not a clear path. Medium probability trade. May need to manage it. Right? And then even more so, oh, you guys hate this one. Entry at area inside of triggers. And then if you took this trade, watch this. First profits at 100. Type it on there. First at 100. Break even now. And then guys, you just got stopped out break even. Let's see what happens. Pivot stop out. Creates a pivot stop out. Oh, you guys remember that pattern? So now you're asking yourself, do I get back in this trade because of odds favorable and a clear path? Because I have that area right there at the top of the triggers, and because this pattern is a pattern that I recognize? So I'll get back into this trade because now the path is clear and the momentum is great and life is good. And we'll see if we can't get paid twice in the same range. How cool is that, guys? But what happens if a third divergence prints? Isn't that an exit condition? So that's the only thing that would keep me out. I got my reversal bar. I'm above that. Oh, look at that. I got my first target. I'm break even. Guys, I got no worries. So here's what I need. I need anybody in this room that's trying to learn this methodology right now to give me a Y in the room. If you see what I'm doing right here, that I'm doing live in front of all of you. I'm not hand-picking pictures, ladies and gentlemen. This is what I teach every day. These are the trades that I take every day. This is the way that I manage almost every day. Pattern recognition creates opportunity. And what's cool is you may say later in life, with this much momentum and a clear path, let's hold for the fib. What do you guys think? Should we hold for the fib? We've got no risk. Jonathan, why not move the buy up where? My target? Why don't I put it up here? Because I'm scared? I already made it. I already got paid on 3 contracts at 100, Jonathan. See that exit? My $100 was so freaking close because of my great entry. All I have now is odds favorable momentum in every trigger line on every chart pointing down, guys. I could have, and Jonathan, I could have been better looking if it wasn't for genetics. You want me to exit? Here you go. Let's exit. Jonathan says we should have gotten paid. Are you happy? Jonathan, what does the large chart say? Says strong triggers, right? Says clear path. Jonathan, my hope right now is that this thing tanks like a mother effer. I already made $300 and I had 0 risk. Why exit? My large chart says go lower. My large chart says down. My large chart says clear path. Guys, that's the second half of management, is learning to trust the large chart. But that's not bad for what we've been doing this for 2 minutes, guys? 5 minutes? That's most people's goal in a day. This is what we do, ladies and gentlemen. Let me figure out where we are in pictures since we had that little digression. I apologize. Paul says a little bit of redemption. 50-50, perfect entry, take money. Divergence prints, and it kills it. Held a little long there, Paul. Joel Beal says 50-50. Let's stress your eyes, Mark. 50-50, great entries create manageable trades, and hoping takes all that money back, right? Joel Beal, are you still in here, my friend? Nope, John, that's a small swing 1-to-1. And then Jonathan, absolutely. A third divergence would be the only reason I would ever exit this trade. A third divergence would be the only reason I ever considered exiting that trade. I don't let fear take over. So Joel Beal, I don't know if you're still in here, guys. This is a 50-50 trade, right? The potential to break. Perfect entry. Plenty of room to get paid. Plenty of room to break even. Guys, divergence is the #1 killer of 50-50 trades. Oh, Jonathan, if this thing goes down, you're going to owe me at least $200. That was your $200 win right there, Jonathan, instead of jumping out. And it's still going. It's still... Look at that chart. What if I did it like this? Oh my gosh, look at that momentum. You got to learn to trust these charts. Let's see if it hits where Rob wanted to put the stop. Remember, the only thing to take us out is 3 divergences. I love a good pastrami sandwich. Unfortunately, my body turned into a sissy, and I can't eat gluten. You just got to trust it, right, Jen? Uh-oh, divergence, but there it is. That's your third divergence, guys. No, it's okay. Guys, I love this, and if you don't take these, if you don't manage them, if you don't exit early, if we don't have discussions, how are we ever going to get better? John C., these are small swing 1-to-1s. I couldn't care less about them. I wish John Novak would take them off of there. These are made from tiny little fluctuations. So when I teach terms, I'm looking for 1-to-1s, fibs, mid bands if the large triggers are a full bar away, and divergence lines. These pink 1-to-1s don't even fall into the equation. So, Jonathan, if you took the exit on the third divergence, totally cool, brother. Right? But have a reason. That's kind of the point I was making. Have a reason. Have a reason for your exits. Have a reason for your entries. Have a reason for your management. And what happens is every time you have a reason, you learn to stick to your reasons. You learn to focus on not whether or not you're scared or nervous or anxious or anything like that. You start to focus on whether or not the conditions were met for an entry, right? Like they were here. Or whether or not the conditions were met for an exit, like they were here. Joel F., outstanding job. I hope that's making sense to you guys. Triggers wide open are a good thing. Amen, Jeffrey. Andy, odds favorable, clear path, pull back to the area, and it's hovering in between the two, right? Doug, it's not a valid reason. How's that? One of the things that I stress every day, Doug, and it takes everybody a little while to really believe it, is that when you're trading, there's 2 things that you have to know before you ever even sit down to trade. What are my rules for entry? What exactly is it going to take me to get into this trade? What does it look like? So I can be consistent. And the only reason that they're my rules, Doug, is because they create a statistical advantage. They create a pattern that wins more than it loses. And then the second thing that I have to know is what it's going to take to get me out. And here's the thing. The same way entries are designed around statistical advantage, patterns that repeat themselves, Doug, exit conditions are 100% designed around things that can ruin my good time. So Once you have a reason for entry, once you have a reason for exit, well then fear starts to work its way out. Fear starts to dissipate. When you learn how to trust the entry, when you understand that the market may pull up deeper into the triggers because it's a correction point, and you don't get stopped out, Andy, inside the correction point because you took an entry that wasn't inside of favorable large triggers. This area is free floating in the middle of the triggers, guys. It's not in this correction point. It's not in that correction point. Rule number 3 is not met. It never got beyond the triggers, and then it did everything Andy expected it to do. So this is an arbitrary stop that's not defined by anything other than a dollar amount. So Jeffrey Dean, we're going to focus 100% on being very if-then, and we're going to focus on advantages, and we're going to focus on repetition, and we're going to focus on creating trust in the methodology, because trust is what alleviates you from fear. Trust is what really sucks the fear out of trades. And once you have that trust, it really becomes a little easier. Andy, did that make sense? Your stop was $75 and you were proud of that $75 loss and not taking a bigger loss, but your risk was in the wrong spot. It wasn't beyond the correction point. You let money dictate your stop placement, not patterns that repeat themselves. And that was where I was going with that one. And then Kenny, when everything is screaming up, you were waiting for a pullback and you had it on the other side of the confirmation bar. Since no areas inside of triggers, you hit the first target and trailed 8 ticks. So Kenny said, when everything is screaming to the upside and life is good, I don't have any areas outside of favorable large triggers. I'll let it retrace and pull back up. And as long as that momentum is constant, I'll get paid. Kenny, this is taking very basic lessons and turning it into money. I love this. Everything about it. It's not a high probability trend trade, guys. This is taking advantage of momentum and a clear path and being on the right side of everything to get paid. That's rad. 50-50 with divergence. You sat on your hands and you said, nah, probably not mine. And then once it's a clear path, odds favorable, pull back to resistance inside of favorable large triggers. Money, 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 money. Nice trade, Kenny. That looks just like the one we just took, didn't it? Beautiful trading. I love this, guys. When you're a chart reader, you're going to find an awful lot of ways to have this market pay you. But it has to revolve around advantages. And way to show some patience when it wasn't perfect. And Iron Mike, remember when you said I keep waiting for my rules to get met, but they don't? This is where I respectfully call bullshit. You could have lost some money in here, and patience pays off. And I'm telling you, patience is the hardest thing in the world. Because if you're not in a trade, your brain's going to tell you that you're not getting paid. If you're not in a trade, your brain's going to be like, dude, Iron Mike. I made you me. Iron Mike, you're not getting paid. Do something. Do something. And you just don't. And then Ron, little ugly by Ron's standards, but when everything rolls up and those small triggers are in the momentum phase and everything is going up here, Ron doesn't take the pullback, he waits for confirmation. Everything is stacked and headed to the upside. He takes a quick hit. I love everything about it. Does that make sense, Iron Mike? The more in tune you are with the rules, the more you see them come to fruition, the easier it becomes to be patient and wait for them. All right, Paul Flowers. 50-50, divergence printed and killed momentum. All right, Mr. Flowers, are you with me in here? And guys, if me calling out your name ever makes you uncomfortable, feel free to send me a message and ask me not to do it. I do it, and I say names, guys, because I like to make it personal. All right, so let's talk about where's it coming from. Paul Flowers, good top or bad top? What do you think? Is it a termination that reversed the market? It's a weak top. Cool. That's all right. Right on, Andy. So let's go to the next one. Do I have odds favorable momentum? Or do the colors not agree? One up, one down. Okay. And then you already mentioned that we don't have a clear path, right? They do love to hear their name, Rob. So I don't have a clear path. And I don't have momentum. In hell, I don't even have an area inside of a trigger pointed in the direction of my trade, right? But here's what's pretty cool. Is you know that the 50-50 says don't take that trade with divergence. And even though I think you may have fudged your large chart read a little bit, your rules still kept you out of a potential loser. Because that's the one part of the rules that you got right there. And that was enough to keep you from taking that trade. And I think that that's pretty awesome how that worked out. Guys, this is about the worst look ever for a trade. This is 100% I hope trade. Especially when these don't agree and these don't agree. And you're just trying to figure out, are these guys going to keep pushing up or are they going to come back down? But then, Paul, let's go to the other side of the coin. We came from a bad bottom here with weak triggers. And guys, this is where chart reading comes in. So this 50-50 trade isn't a high probability trade. Would you agree, Paul? Bad bottom, 50-50, even with odds favorable momentum. If you caught it right here, you had to manage out of it. It's a 50-50 that fails. So maybe more down, right? These small triggers down with aggression kind of support the idea of more down. These large triggers rolling right at the area, not able to break, kind of support the idea of more down. Here's your pullback right to that same resistance with the smalls below it with the large rolling. Maybe if you want to take a shot at this one, you give it a little reversal bar right here. Or you tried that momentum right here and had to manage out with a loss of momentum. So for a 50-50 trade, the read isn't there, but from a chart reading, I can begin to piece together this puzzle that suggests maybe looking short was absolutely the right thing to do. I'm just waiting for some rules to be met for an entry. Good stuff. And then Iron Mike, we talked about that one. It's tough when they don't get you. And they never appeared? Never got the rules met? Happens sometimes. All right. And then, Paul, I believe this was you again. 50-50, divergence prints. You choose not to take the trade. I think that's great. That's great adherence to rules, right? And what sucks is you're going to watch those work every now and then, Paul. You're going to see it run anyway. And that's frustrating for new users. Is when your rules say don't take the trade and then it does everything that you thought it was going to do. All right, Jonathan. Do you have momentum? Do you have momentum? That deep sigh was, man, I sure wish you would annotate your charts. Guys, let's all annotate it together as a classroom. You thought losses a lot of money? Losses don't have to be a lot of money. All right, do you have a clear path, Jonathan? And Doug, I don't want you to be scared of losses. I want you to be fretful about the wrong losses, avoidable losses. Losses are a normal part of trading. Guys, help me out here. Do I have a clear path on my large chart? No. Do I have a 50-50 on my small chart? My large chart, excuse me. I'm telling you guys, if you just talk through it, no, Mike, maybe it's hard to see. There's the fib right there. Sorry, I should have done that. There's my fib. There's my triggers above it. My bad. Sorry about that. So I do have momentum, but I don't have a clear path. Let's tiebreaker, guys. There's my split triggers. There's my areas right there. If I were going to take a shot at this one directly into a termination condition, my areas inside of favorable arch triggers, the language for the entry says that that 1-to-1 has to be where I enter, right? Very much so, Gary. But here's the problem. If my second correction point is all the way up here, my stop has to go all the way up here, guys. My stop has to go on the other side of these synthetic triggers. I'm already trading into a termination condition, and I'm already looking at split triggers. So one thing that you can do, Jonathan, is if you choose to take this short trade anyway, right? If you say these are weak, that was divergence, maybe we're going to the mid band. If you get in at these 1-to-1s, you've got to just make an arbitrary stop, right? How much are you willing to risk? The other thing that you can do is you can say, I'm willing to pay for confirmation. I'm willing to pay whatever it costs for a reversal bar so that I can put my stop behind it. Does that make sense? When your rules don't allow you to make a lower risk trade, especially if you're trading into trouble or something like that, the idea of the confirmation bar at least gives you established risk. And it says that it's going in the correct direction. So the beginning it looks good, and then we're trading into trouble. And with momentum, it has the potential to break. Oh, I love that, Gary. Doug, did you see that Gary just posted? His average losing trade today has been $78. Great entries create manageable trades. So Jonathan, this is just a tough look. But your large chart reads, dude, I'm telling you right now, your large chart reads are coming in better and better every time you put something together. And we're just going to keep working to make it easier. We're going to keep working to make it higher profitable. And we'll get there. All right, Morgan, large triggers never cross. No such thing as an all right top. Let's keep it simple, right? Let's keep it strong top, no triggers through termination, or weak top. Triggers get through the termination, even if it's just the small. So we're going to call it a weak top. That's okay, though. There's odds favorable momentum, right? That's the best momentum ever. Can we agree that that is some sexy momentum? That's the kind of momentum that gets people excited. That's the look that makes people go, whoa, this thing's screaming to the downside. And then it hits those damn 1-to-1s, Morgan. Goes directly into a termination condition, 100%, and it ruined your good time, brother. If that termination wasn't there, I loved your entry. Hate your stop. Still in the correction point. It saved your bacon a little bit here. Love your entry. Hate your stop. To where? Why? Why did you readjust the stop? Does it say, hold on, had $200 profit here, so you moved your stop loss down a few ticks to where it got stopped out. Jump from a small red bar, your stop loss at the same time, spam me blinking, haha. First time being stomped on so fast. It'll happen again, don't worry. CL's not making people work for it today though, right? And these are the things, guys. Morgan, this was my biggest problem as a brand new trader, is I would get so caught up on this, and then I would see this, And I would be like, oh my gosh, this is amazing. And I would miss that 100%. And Morgan, this was my Achilles heel as a brand new trader, was so amped up looking for the trade that I forgot to look for the rules to be met. Does that make sense, everybody? I would get so excited about the trade that I would completely forget to see if my rules were met. I wouldn't go through my checklist. Not even the divergence. I don't even care about the divergence, Morgan. This right here. That was it. That was the one. Because so even if these one-to-ones weren't here, it was still a 50-50 with divergence, right? Which is a deal breaker. So maybe if you thought it was a 50-50, that could have been enough to keep you out. And it's okay. You're not going to see this stuff in the moment. And it goes back to that. Guys, I'm horrible at analogies, but I think this one fits. If I'm learning to drive a car, if I'm a 15-year-old kid and my dad says, all right, you've got your learner's permit, let's drive to the mall. Because the malls were a thing back when I was a kid. We would get in that car, and I couldn't tell you one thing that happened around me from my garage to the mall. I couldn't tell you how many red lights I had to stop for. I couldn't tell you what the colors were for the car stopped next to me. I couldn't tell you what song was on the radio. I probably couldn't even tell you how long it took to get there because I was so hyper-focused that I missed a lot of stuff, right? And then as you start to get comfortable, you get to see things a little bit more, Morgan. There'll be a point to where you never question momentum. And I think you're at that point, right? You never worry about whether or not there's momentum. That takes you a fraction of a second to identify. And you actually, and it's kind of funny because you nail entries now. You really took that little bit of lesson and you're nailing the best of the best entries. So let me show you the progression, right? No, annotate the hell out of them. That's how you learn. So initially, Morgan, that was your entry somewhere about right there, right? You were so focused on this chart, but the entry was your struggle. So here's the deal. You worked so hard at correcting your entries that you're not giving the large chart the same attention now, right? Momentum is never a problem. Second nature. It takes zero of your mental capacity to recognize it in the moment. You put so much work on entries that's kind of the same thing. So your thing is what my thing was. Your thing is, hey, let's make sure that I'm not trading into a termination condition. And what I did, Morgan, to help kind of beat that through some coaching from my brother was every time I thought I was going to take a trade, I said out loud, has price reached an area and the trigger's not broken? And it would keep me from looking for the long right there. And I'm telling you, it fixed me. So I started talking literally out loud, guys. I still do it. It scares my dog. Do I have momentum? That took you a second to learn. Do I have a clear path? And if I don't care about that beautiful entry area. I love the path that you're on, dude. I think that you are making huge strides every time you step in front, and you're doing it because of this. You're doing it because of this annotation. You're doing it because you're taking the time to write out what you see, and then you're going back and you're policing yourself. You're not just taking a loser and dropping an F-bomb, right? That's it. Has price reached an area? The trigger's broken it. You're not just dropping F-bombs because you lost. You're going back and you're studying it. You're saying, holy shit, what did I do wrong? Let me go find the mistake. I'm not going to blame the market. I'm not going to fault the methodology. I'm not going to do anything other than make sure that I followed my rules. And Morgan, what you're finding is exactly what you need to work on through annotation. And if I had 1,000 of you in this room Everybody would be freaking rich. All right, who was this? This was... I clicked on it, but I forgot to see whose this was. Hold on 1 second. Zorro. Hey, Zorro. Mark Novak, 6524. So Zorro, large chart is just nothing but up, right? And you take that first, I think it's, I'm trying to line up prices, 43.2, 43.2. So you take the first one right here, 50-50, everything up, strong triggers. You're in a little high, but that's okay. Stops in the right spot. You get paid. You exit with a loss of momentum. When it snaps back with the potential to break, you decide to re-enter, and you take a couple trades. Zorro, can we talk about one thing that's going to help you get more out of these trades? Specifically the second one. Guys, when you're taking these momentum-based trades, and you're in right here, the second price gets to the left side of these small triggers. There's your small triggers. That market's not going down until you see one of these reversal bars. It's just going to continue up. It may fluctuate. It may scare the ever-loving crap out of you. But until you get a close on the wrong side of those triggers, Zorro, you've still got everything you need to hold this position. And this is what we call the momentum phase, guys. When the price bars can't get to the wrong side of the small triggers, we're in that momentum phase. And since it's the immediate little momentum that's got you in, you can let that loss of momentum take you out. And as long as this is screaming, right? This small chart look gives you the opportunity to maybe hold a little bit longer and see if they make it to that next area. And it's dependent on the type of trade you take. But if you're relying on momentum to carry the move, when that momentum is gone, it's okay to say things aren't perfect anymore. Weak top, strong triggers, potential to break, and then you make a choice. 2 different correction points, and you're just not sure. You get in at the mid-band. I don't know where your stop was, and it just flies down. I like it. And this is that one where you're like, okay, if it gets into the mid-band, maybe I wait for confirmation because it could pull up here. Does that make sense, Stuzio? When these triggers are split, it becomes a little more difficult. This mid-band floating in the middle of them. How do you know if it's going to go from the mid-band and not from this fib, right? How do you know that it's not going to go to these synthetic triggers? You don't. So you either take a shot at the mid-band, totally cool, or you wait for that confirmation bar, that reversal bar, and then check this out, Stuzio. You never get a close on the wrong side of the triggers till all the way down here. That exact same lesson that we talked about with Zorro. If you're in this trade and the large chart says down and you're still on this side of the small triggers, guys, you're going to learn to hold that trade. You're going to learn to get paid on bigger moves. In the beginning, totally cool. Pay for a little confirmation so you don't get run over on the way up here, and then use that same idea of advantage to hold a little longer. Great trade, Stuzio. Nicely done. And then Ron C says he's done for the day. And that was a while back. Odds favorable, clear path, leads the way. Same look, guys. Outside of the smalls, out at trouble. Absolutely beautiful. So there's that lesson. Three pictures in a row, guys. Outside of the smalls, you can hang on. Outside of the smalls, you can hang on. Outside of the smalls, you can hang on. There might be some money to be made with that look. Jeremy says, with this look on the large chart, I'm going to look for a trade on the small chart. And Jeremy, this is where fighting those small triggers will eat your lunch. Waiting for that confirmation bar, especially on the 13.2. Waiting for that reversal bar pays huge dividends. It actually gives you a better entry with established risk and more room to all your problems. I bet it was. How did you pick your stop? And this is, man, Jeremy, this is a NASDAQ thing. And I know that you stepped away from the NASDAQ a little bit. And let me show you why this is NASDAQ thing. I like the colors on your chart too. That's easy to read. Let me make this a little bit bigger. And this is what helped me with trading the NASDAQ. Jeremy, if you were trading crude oil, would you go long against this look on the large chart? A pivot stop out with strong triggers below the large? Hell no, you wouldn't. You'd be thinking shorts, right? Your 13.2 chart on the NASDAQ is the large chart everywhere else, Jeremy. Which means that you had the right idea looking for the long trade. But because this is huge, dude, this is a 34.5. That's a tank of a chart. That immediate momentum, remember, and this is actually the fourth picture of it. When we said as long as those bars are outside of the small triggers, it's going to keep going down. And it's not going to go up until it gets to the other side. Oh man, Ron, enjoy it. I had dogs last night. I actually was thinking of chili, but I didn't get it. So Jeremy, this is a great opportunity, and I don't know if you've done much study on it. If you go to the NASDAQ section on my spreadsheet, I blew out like 15 accounts trying to learn this trick. When my small triggers are flying down, don't fight them. Wait, just be patient. Wait for it to be better. So there's two types of NASDAQ entries for you guys trading the NASDAQ. When the large chart says go, the way it was on your chart, Jeremy, if I reach the area and the small triggers are less than a full bar away, I'm patient and I wait for the close on the correct side of the small triggers. If I reach the area and the small triggers are a full bar away using the reversal bar marker, then I'll enter at the area. This is one of the biggest things for me, and this created a lot of success for me on the NASDAQ. So that little implementation, when the small triggers are less than a full bar away, I'm going to exercise my patience. Large chart still says up. I'm going to wait for that close on the correct side. I'm going to have my established risk, and I'm going to ride that wave. Notice how the smalls never get to the wrong side, never close on the wrong side. It's the same idea for management. So Jeremy, I hope that helps a little bit. NASDAQ requires just a little different level of patience. And then GWC knows the lesson. I love this. There's his good top. He's on the right side of things, and he holds it all the way down, right? Loses momentum, gets to the area, exits, lets it turn into the trend trade, and gets paid again. Absolutely beautiful GWC. That's all our pictures. And no worries, Jeremy. I appreciate you posting, man. Nice to see you guys in class that disappear after a while. And now we're looking for the clear over there on crude oil. So, that was a good day. So, Doug and Jeffrey, and is Chris H in here today? Is it getting easier? The more you hear the same darn thing over and over, is it getting easier? Oh, that's awesome. What part of Texas you headed to, Morgan? Oh, I'm sorry. I love driving through El Paso. I tend to not stop. That's awesome. It's pretty though. It is prettier. Good, Doug. I want you to embrace that idea that I know it's a lot in the beginning. I know it's a little overwhelming in the beginning. I know that it feels like a lot of information coming at you guys in the beginning. If you stick it out 5 or 6 days, that's about how long it takes for everything to start to come together and click. And by the end of 5 or 6 days, you're going to understand that this does work. That there is opportunity, that the methodology is sound. So Jeffrey, 2 things on your screenshot. Are you using capture? You have capture, right? So the things that I think are the most important with this is when you click the button, if you only hover over one chart, you're only going to get one chart's worth of information. So the most important thing is always give me the two charts. So you have to left click in the upper left hand and pull it all the way down to the bottom right hand. And things that I really like to see, and guys, this helps me, especially if you're not circling entries, is I want to be able to see the timestamps and I want to be able to see the prices. Because if you go, did it right there, I don't have any idea what you did, right? I don't have any idea where you got in. So having those timestamps and stuff to line up is great. And then even more importantly, if you don't have your entries and exits turned on, circling. Hey, I got in right here and I got out right here, Mark. And I did it because my large chart was strong. So all of these tools are click and drag. Whether it's the box, whether it's the arrows, whether it's the call out. So you're going to draw an arrow at the things that are important, right? You're going to put a box around entries and exits so I know where you did it. And then you're going to say, hey, Mark, check it out. Odds favorable momentum. And this was the potential to break, to break, right? And use the language. Mark, that's one of those 50-50 looks. Am I reading this right? And if you're not, we'll talk about it. That's what's cool. And then with your entry, this is what's so important. If it's not high probability, you might say, I let smalls break, took the quick pullback to the area that had the potential to break. And what this is this is a momentum entry anticipating the breakout, guys. And then you might up here say, got out at the red line. If you go back and annotate 5 pictures, right? And then Jeffrey, use your practice on this for this one. Take this picture right here, right? Hit that camera. And this is a great way to practice. Draw your arrow and say strong triggers. Smalls above large. All green. I know, right? All green. This is momentum. This is rule number 1. And this is kind of cool, Jeffrey, because if you do this, and this is for everybody that's brand new, Doug as well, if you go through the process of writing this, if you go through writing what it is, why it is, what it means to me, and then you upload it and you go to that spreadsheet, and I accidentally closed mine out. Once you hit upload, it'll give you that screencast link that you see everybody posting in the room. You can open up your spreadsheet and go straight to the 101 section and copy that link and drop it right in. And then, guys, we just added another one to strong triggers. When I say the smalls break, so for this particular one, Jen, let's go back to editing. Oops, wrong one. Oh no. Where did it go? There we go. I knew I still had it. Jen, do you see how the small triggers on your small chart get above the area in question? This is the look for nailing those momentum trades. When you have odds favorable on both charts. So what a momentum trade is like this, Jen, is you're anticipating the breakout. You don't have it yet because the large triggers haven't cleared. You're anticipating the breakout because of the momentum. And your small triggers through the area on the small kind of helps with doing that. You don't want to trade into an area. You want to trade from an area. So when the small triggers break through, how often have you seen that little fluctuation, right? That little snap pop, and it goes right from the fib. And you can have virtually no risk. Like you can say, I'll give it 2 or 3 ticks below the fib. Anything beyond that, I have to look for a 50-50 trade. I love these trades, guys. And they take a lot of practice to get good at them. They take a lot of repetition to get good at them. But once you're good at them, man, they pay dividends. So here, do you see how the smalls didn't really break through? I'm not anticipating a breakout. There it is, perfect. The triggers break through, buying at the 1-to-1s, out with the loss of momentum. Thank you for that, John. That's perfect, guys. That is textbook. And then, ladies and gentlemen, look at how the bars are still on the win side. Still on the win side. And then once they get off the win side, John says, that's it. Pay me. And it might turn into a trend trade. It needs to go up. That's trade number 7 from 2004. That trade is 20 years old, ladies and gentlemen. And John Novak is at least 4 times that. So you know he's smart. Like a fine wine. And guys, that's it for me today. Great classroom. Thank you, everybody, for posting, for participating, for annotating, for questioning. That's the biggest one, guys. Don't ever stop asking questions. I'll be back tomorrow morning at 9 a.m. and we'll do it again. We'll talk about patterns. We'll talk about everything that we see. I'm going to take today's video